Assalamu alaikum warahmatullah. Inshallah, we will start shortly. Just giving a couple of more minutes for everyone to join in.
अस्सलाम वालेकुम।
वालेकुम अस्सलाम।
जी वालेकुम अस्सलाम।
क्या हाल है फरूक, खैरियत से हैं?
Excellent. So
brother Rizwan, we can start, I think.
we are live. Okay. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalamu ala ashrafil anbiya'i wal mursaleen. Nabiyyina Muhammadin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Excellencies, distinguished guests, industry colleagues, Assalamu alaikum wa rahmatullahi wa barakatuhu. And a very good day to all of you joining us from Pakistan and Southeast Asia in particular, as well as other colleagues joining us from different parts of the world. This is indeed a very important gathering for when it comes to AAOIFI, Accounting and Auditing Organization for Islamic Financial Institutions. This is an event which we call public hearing, where we introduce our standards to experts, subject matter experts, and other colleagues to receive their feedback and comments on the exposure drafts of the standards that are about to be published. This particular public hearing is brought to you in collaboration with State Bank of Pakistan, as well as Institute of Chartered Accountants of Pakistan. We are very thankful for their collaboration in this very important gathering. And they've been very generous in extending the invite to the local stakeholders to ensure that we receive the feedback on two very important standards which are related to AAOIFI financial accounting standards. The two standards that we will be presenting to you today for your feedback and comments are financial reporting for Islamic financial services offered by conventional financial institutions, as well as interim financial reporting. So these are two very important standards which we have recently made available for public consultation, and they will be presented shortly to you by the Secretary General, Mr. Umar Mustafa Ansari. Before any further ado, let me also use this opportunity to invite Mr. Mustafa Ansari to deliver his welcome remarks and to formally welcome you all.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Whenever we hold these public hearings, something comes to my mind that our earlier governance standard setting board chairman used to say, Dr. Ishrat Hussain. You all know him. He used to say that standard setting is not something that can be done in a boardroom. It is something where you need to have the right level of, right amount of, and right quality of public interaction. And industry experts, other stakeholders, regulators, they all have to play their role in the process of a standard setting. Because standards are for people and the taste of the pudding is in its eating. The standards cannot serve the industry if they do not address the needs of the industry. They cannot serve the industry if the industry doesn't understand them well. And that is one of the most important reasons that in past several years, we have significantly enhanced the process of interaction, collaboration at different stages of standard setting. We are holding the public hearings on an ongoing basis, as well as we are holding a lot of workshops and roundtables. And this serves as a very important tool towards getting the right level of, right amount of, right quantity of interaction and public input. I would like to thank our two member institutions and our two very worthy institutions that are collaborating with AAOIFI and a lot of activities, the Central Bank of Pakistan, State Bank of Pakistan, and the Institute of Chartered Accountants of Pakistan, which is my mother institute as well. So I'm so much thankful to both the institutions for providing this collaboration. We normally try to do the public hearings on a physical basis, which is even better mode of interaction, but we know that still things are getting to normal, but still they are not normal. So for some time, we do not want to enhance the risk related to safety and health of our worthy participants. So we are still continuing our public hearings on a webinar basis. But inshallah, now we are trying to initiate things on a physical basis. You all are welcome to our conference on 1st and 2nd of December in Bahrain, which will inshallah be done after a gap of 2 years on a physical basis. And we hope that going forward, things will be normalized. Brother Farooq is a professional who I personally highly, I won't say envy, but he's one of the professionals from whom I have myself learned a lot. So I'm so happy to see him here as a representative of the institute. Congratulations to him again for being elected again. And we hope that this mutual collaboration between the institute and AAOIFI will continue in the times to come. Thank you very much. With that, back to you, Brother Rizwan.
Thank you very much, Brother Omar, for giving a very comprehensive and concise overview and highlighting some of the important event that is happening at AAOIFI after 2 years, the AAOIFI Islamic Development Bank Conference on the 1st and 2nd of December. Now, before any further ado, let me also have the pleasure of inviting Mr. Farooq Rahman, the ICAP's Accounting Standard Board Chairman, to formally welcome you and deliver his opening remarks. Over to you, Mr. Farooq. You're muted.
Thank you, Dr. Rizwan, and thank you, Umar, for such kind words. Now, formally, Bismillahirrahmanirrahim, Assalamu alaikum, good morning, good afternoon, good evening to all, whichever part of the world the attendees are. So on behalf of the Institute of Chartered Accountants of Pakistan, I welcome you all. Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, has been working for the development and issuance of accounting, auditing, ethics, and Sharia standards for Islamic financial institutions and industry. So their efforts and consultative approach are commended. On the part of ICAP has close relationship with AOFI. One of our council member, my dear colleague Syed Najmul Hussain, he's a member of AOFI's accounting board, while our past president, Mr. Hafiz Muhammad Yusuf, is a member of AOFI's Public Interest Monitoring Consultative Committee. The market of Sharia-based products has been growing, and it is expected to further grow in coming years. So in Pakistan, the network of Islamic banking industry includes full-fledged Islamic banks and conventional Islamic banks that are offering Islamic products. The asset base and portfolios of Islamic products are growing. So in the context of growing market of Islamic products, work of AOFI is of great importance and relevance. ICAP has been collaborating with AOFI in its public hearings of the draft financial accounting standards. So today, ICAP has collaborated with AOFI in organizing a public hearing on 2 exposure drafts of financial accounting standards. Number 1, the financial reporting for Islamic financial services offered by conventional financial institutions. The objective of this standard is to establish financial reporting requirements for Islamic financial services offered by conventional financial institutions. The other standard is the interim financial reporting. This standard sets out the principles for the interim financial reporting for all institutions having adopted AOFI financial accounting standards. So we are pleased to collaborate with AOFI and look forward to an insightful discussion. Thank you.
Thank you very much, Mr. Farooq, and we do really appreciate the support that comes from our member institutions like yourselves, ICAP, which played a very important role not in the financial accounting of Pakistan, but globally. And we do appreciate the support that comes from yourselves and the Central Bank of Pakistan in particular. Pakistan is a very important market for us. As AOFI, as well as for the global Islamic finance industry. And we look up to it when it comes to the growth and resilience, as well as the penetration of Islamic finance, as well as the high potential that the market offers for the global industry. So we thank you very much for being with us and for supporting this very important cause. And inshallah, together we can help and promote this, promote and develop this very important market, inshallah. Thank you very much. Now, before I move on to the actual session of the day, which will be delivered by the Secretary General, Mr. Umar Mustafa Ansari, I would like to put on record a huge appreciation and thanks to the accounting board at AOFI, which helps us deliver this or develop these very important standards. These are very well known and experts coming from different parts of the world, coming from regulatory and supervisory institutions, financial institutions, academia, who all come together to help us develop these standards. In addition to that, we also thank the working group members and working groups that we have formed under the supervision of this board. There are many different, there are hundreds of people who help us develop these standards through these working groups. And all of them actually spare their time and effort to be with us without any financial remuneration. And they come together to share their experience, expertise, and knowledge in developing these very important standards for for the global Islamic banking and finance industry. In addition to that, huge appreciation and support to AOFI Secretariat, in particular the standards development team, who work tirelessly to bring together this very important standards for the industry, as Brother Umar referred to them as the pudding. The pudding, there's a lot of hard work that happens in the kitchen that at times it goes unnoticed, but a huge appreciation to the colleagues, in particular on the financial accounting standards team. We have Brother Majd Bakir, the Director of Professional Standards Development. We have Sister Farida Qasim. We have Sister Marjan. We have Brother Haroon. We also have Sister Noof. All of them put a lot of hard work in organizing a lot of events, a lot of meetings, as well as coordinating with the boards and working groups in putting together these very important standards. In addition to that, I would also like to put on record the thanks to our standards implementation and membership team, who helps us put forward these standards to the market and provide a platform to engage with the audience and the stakeholders in various shapes and forms through events, workshops, and conferences, as well as having one-to-one meetings and engagements with these very important stakeholders. Just lastly, just some housekeeping rules. To be honest, we are here to receive your expert feedback and opinions and comments on the exposure draft, which will be presented to you. The exposure draft will be presented in the PowerPoint version, but they are exactly same as the exposure draft, which has been shared with yourselves and is available on AAOIFI website. We will also share the links through the chat in this Zoom platform. Additionally, if you're requested to share your feedback and comments through the chat window. If you have any questions, please raise your hands. We will allow you to ask by voice, as well as the Q&A tab at the bottom of your screen on Zoom platform, where you can also ask your questions by typing in. Of course, as I said, the PowerPoint presentation will be presented. It's the same as the PDF, so there is no separate PPT which will be shared with the attendees. So if you would like to refer to anything, it is actually exactly the same as the exposure draft document. This webinar, of course, is being recorded to make sure that we don't miss out on any of the comments and feedback that we receive. Additionally, for AAOIFI fellows, this webinar also qualifies for one CPD hour. If, for example, if you are unable to share all the comments and feedback, please do share your feedback and comments after the public hearing as well on accounting@aaoifi.com. Your comments and feedback are very important to us as we progress in the standards development of these very important standards as we bring to you. So with that, of course, we would also request everyone to stay on mute unless they are asking any questions. And if they have any feedback or comment, please raise your hand if you would like to ask by voice. With that, we thank you very much for being with us, inshallah, and we hope that this will be a very interactive and engaging session rather than a monologue. We wouldn't like to have that. Let's keep it more interactive. And if you have any questions, please raise your hand or ask by typing in the Q&A tab at the bottom of your screen. With that, thank you very much. Now I would like to request the Honorable Secretary General to take over and present the two exposure drafts of the two important standards.
Thank you, Brother Rizwan, again. Bismillahirrahmanirrahim. The standards that we are going to discuss today, both are shorter standards and not very detailed, but both have their own importance and some of the complexities. The first standard that we are going to discuss now is the Windows standard. In a nutshell, we can call it Windows. Otherwise, it's the Islamic financial services offered by conventional financial institutions. It is an area which is always a weak area for Islamic finance with regard to the controls, with regard to the reporting, which is done by the Islamic finance windows of conventional financial institutions. We already, as of now, AAOIFI already has existing standard FAS 18, which was issued nearly 17-18 years back. So actually it needed significant revisions for multiple purposes. Number one, we have to align it with the new framework, new financial accounting standard number 1, which is also being finalized at the same time. It's almost final. We just need to give it the final touches and issue. And there was a public hearing held in Pakistan as well, if I recall correctly. On FAS 1, we had multiple public hearings and additional roundtables as well. So there were a lot of changes coming because of the framework and the revised financial accounting standard number 1, which needed to be incorporated in the accounting standard for Windows. In addition, there were some additional considerations that you learn with experience. As the industry grow over a period of time, you actually have more and more new issues coming in, new considerations coming in that you need to take into account. I'll first take you through the significant changes that this standard has brought in. With regard to the main changes, the most important change I would say is that the alignment of definitions, alignment of terminology, and alignment of the some of the treatments which are there, not in detail, but with regard to some one or two minor things, but some of the things needed to be aligned. Another very important issue that needed to be addressed was with regard to certain of the I would say certain of the aspects that were primarily governance aspects, not accounting aspects, that were included in the earlier standard, that are still included in the existing standard. For example, and those things also are creating some anomaly in the market. For example, the existing standard was referring to the Sharia principles and rules which are defined by the respective bank's Sharia board. That it was actually asking for having a Sharia board. Asking to have a Sharia board, technically speaking, is a governance requirement, not an accounting requirement. AAOIFI, when it started its functioning nearly 30 years back, the industry was in evolving stage. The AAOIFI itself has gone through a lot of evolution in the standard development process. At that time, we were not having separate governance standards in each of the areas. So some of the Sharia requirements, some of the governance requirements, you can still find them in the old accounting standards, because it was all integrated. We still believe that what the functions that AAOIFI is doing and the way AAOIFI is developing the Sharia accounting, auditing, governance, and ethics standard, they all are an integrated set of standards for the Islamic financial institutions. But the important part is that you need to put lines with regard to the requirements which should be contained in each of the sets of the standard. So we clarified some of those important issues. We clarified the terms Islamic finance window and conventional financial institution. Conventional financial institution is a more recently introduced in some other of AAOIFI standards as well. I would also like to mention that AAOIFI has also is near finalizing a joint Sharia governance standard with IFSB, Islamic Financial Services Board, which is going to be first joint standard between the two top standard setting bodies of Islamic finance. The main purpose is to avoid anomalies and avoid overlapping of mandate between the parties, and wherever the two bodies have an overlapping mandate, we will try to bring in something which is as a joint standard. So it includes one chapter on the windows as well, windows and Islamic finance subsidiaries as well, because we believe that Islamic finance windows and Islamic finance subsidiaries have a lot of governance issues which need to be addressed. Actually, AAOIFI Governance and Ethics Board also has a project in pipeline, which is actually not yet initiated, because first we want to finalize the project related to the joint standard with regard to windows. So if there are additional aspects related to governance of windows, we will be covering that separately, inshallah. I just want to mention it because actually earlier it was only the accounting standard and it was just touching upon one or two of the governance aspects, while right now we believe that even the accounting standard, accounting and financial reporting standard, needs to be enhanced and need to be strengthened and need to be more focused and clear, as well as we believe that governance standard is needed in this area. So the overall output from AAOIFI will be including both aspects. So this one, as I mentioned, we are clarifying this one, and we are just we are clarifying the concepts of Islamic finance window, the concept of a conventional financial institution, the definition of a conventional financial institution. We are clarifying summarized accounting guidance for the conventional institutions with windows. and it removes such treatments. How concept of virtual reporting entity has been introduced. This is one very important issue, that earlier there were some Islamic financial institutions, conventional financial institutions, that were offering only a single product or a few products without actually having a window. When we say having a window, which it means that you need to have a concept of an institution within institution, where you need to segregate the assets, liabilities, quasi-equity, and equity of the respective Sharia compliant component of the institution. So it means that we are after these changes, whereby the earlier it was allowed to have a product. Again, it was an accounting standard. So saying that it was allowed is not something that an accounting standard cannot allow you a business transaction. Actually, it was just catering to a type of business transaction, which means that somehow people could infer that AOFI was legitimizing that a conventional financial institution can have a single product. In this respect, AOFI now took a decision that on an overall basis, we do not want to encourage this culture that a conventional institution may have only one or a few products without actually segregating the windows. We insist that irrespective of having a licensed institution or not a licensed institution, if you are doing Islamic finance transactions, then you need to segregate the whole component in a form that it becomes like an institution within an institution. Even if it's a virtual reporting entity, it has to be segregated. Further questions and further discussion we'll have when we will be going through the document itself. I believe that there will be a lot of questions with regard to what is meant by and what is understood by the term virtual window. The standard prescribes that in case of material Islamic finance window, it is preferred to present a complete set of financial statements. So while we believe that a summarized and condensed set of financial statement is the solution for most institutions having an Islamic finance window, yet we believe that there can be institutions which are having a material Islamic finance window. And the material Islamic finance window can be material in the context of the bank itself. For example, it is having 20% or more. Again, this percentage of 20% or something is not assigned. A relative significant term has been defined, has been mentioned, which means that it is still judgmental. But considering having a window which is significant in terms of the institution itself, and there can be situations where the window is not significant in terms of the institution itself. For example, it's just 10% of the institution, but in terms of the relative size of the Islamic finance market of the relevant jurisdiction, it might be material. For example, for quite some time, we have seen in Pakistan the situation that the largest bank was Mizan, but after that, second largest was earlier Al Falah, and then it was Habib Bank. So it is quite possible that in different markets, this is the situation. Even we have example of Oman, where Bank Muscat Misaq is actually the largest amongst, although it's a window, it's not a full-fledged bank or a subsidiary, but it is still larger than the other largest bank. So these are the situations where we believe that it can become relatively significant. And in this situation, we have the standard requires that it is preferred that whenever the window is material, a full set of financial statements in accordance with the AAOIFI FAS should be prepared. However, if the window is not material or if somehow it is impracticable, then a minimum summarized set of financial statements has to be prepared and attached in line with the requirements of this standard. Materiality considerations have been defined in principle, as I mentioned, and Sharia principles and rules along with the relevant hierarchy have been defined in line with the definition as per AAOIFI FASs and the AAOIFI framework and the AAOIFI governance standard. Those of you who are more familiar with the newer AAOIFI standard must understand that there are a lot of issues with regard to the determination of as to how Sharia principles and rules are to be determined with regard to an institution and AAOIFI. has now made it a consistent practice that the Sharia principles and rules have to comprise of the AAOIFI Sharia standards and the country Sharia regulations and the CSB Central Sharia Board's regulations and the AAOIFI accounting standards requirements related to Sharia, and then that the last item of hierarchy, the respective Sharia board of the institution's rulings. So this is the hierarchy that we have been using consistently in different parts of the different standards of AAOIFI, including the governance standards and accounting standards, and we have incorporated the same here as well. So earlier anomaly with regard to having a single Sharia board and considering the Sharia principles and rules defined by that one are to be taken, is now made consistent with other AAOIFI standards on the governance and financial accounting side. I can see Brother Ghulam Shabir raising his hand, and welcome Brother Ghulam Shabir. Please go ahead.
Thank you so much, Brother Umar. It's a pleasure for us, State Bank of Pakistan, to be part of your initiative, and we really appreciate for coming up coming up with an exposure topic, a very important topic. I mean, financial disclosure for Islamic banking windows. In fact, this standard is very important for our market. In fact, as you know that we have total 22 financial institutions which are adopting Islamic banking services, and amongst those 22, 17 are conventional banks, which have dedicated Islamic banking divisions. So I very much appreciate AAOIFI for coming up a very detailed exposure talk on this topic, and my appreciation to your accounting board, to your teams, and I especially thankful to AAOIFI for having their first public hearing session at Pakistan. So thank you so much for that as well. Brother Umar, I was just seeking your guidance on that. Like you said, that material Islamic finance windows. Since I mean, these standards are forward-looking, and is there any possibility that this requirement to have complete set of financial statements be recommended in this standard, irrespective of the volume of Islamic banking window? Like, as you know, that here in Pakistan, this is one of the regulated requirements that every Islamic banking window has to come up with their own financial statements. Well, this is part of the complete annual accounts of the conventional banks, but there is a separate section for Islamic banking business which contains their balance sheet, their P&L, their statement, and so many other disclosures on that. So it is just a proposal if you feel it's logical, because these standards are forward-looking, and going forward, maybe these Islamic banking windows may come to a level. Well, here in Pakistan, there are many cases where Islamic banking windows have a volume greater than the full-fledged Islamic banks. So in that case, it was my first recommendation. And for that, in this exposure draft, if we look at class A, which is at page 4, the existing standard includes summarized accounting guidance for Islamic financial services offered by a conventional financial institution without having an Islamic finance window. So how come this exposure will be applicable to a conventional financial institution which does not have Islamic window?
Sir,
just struggling to understand that.
No.
Okay. Your guidance.
Yeah, no. Brother Ghulam Shabir, first thing is it's always a great pleasure meeting you, and hope next time we will be able to hold such events on a physical basis, and we'll be able to meet physically, inshallah. Secondly,
we sincerely look forward, sir.
Yeah. And secondly, we highly appreciate the support the Central Bank of Pakistan always provides to AAOIFI in its different initiatives, and we hope that the level of adoption, although Central Bank of Pakistan is one of the institutions that adopts our standards partially, but we hope that going forward it will be a full adoption. And every time I say this thing, that AAOIFI is getting more from Pakistan, and Pakistan is getting less from AAOIFI. So this is one thing that I understand that you have more and more things on agenda with regard to AAOIFI, but we hope and we pray that going forward, AAOIFI's standard adoption level for Pakistan improves, inshallah, going forward. Brother Ulam Shabir, first question is that what we said is that there are two options. I'm just taking you directly to the paragraph, and let me read the paragraph. A conventional financial institution having an Islamic finance window shall opt either of the following financial reporting models in respect of the Islamic finance window. A, providing a complete set of financial statements of the Islamic finance window in line with the relevant AAOIFI phases, considered to be a preferred treatment where the quantitative size of the Islamic finance window is relatively significant either in perspective of the overall size of the institution or the Islamic finance industry of the relevant jurisdiction. We did not define any percentages here or any amount here. What we said that it is to be a judgmental thing. Now, Brother Ghulam Shapir, if you feel that this is the preferred treatment, then as a regulator, you may require that. We understand that the regulator in Oman is actually requiring something close to that, irrespective of the size. We are told that. I haven't checked all details on that myself, but during discussions, we were told about that. So it is a regulatory thing, and actually it was discussed during the working group and the board whether we leave it to the regulator. So actually, technically, it is always left to the regulator if they want the industry to adopt one of the options provided in the standard already. The second option is providing a condensed set of financial statements for Islamic finance window attached with and forming part of the financial statements of conventional financial institution reflecting its financial position and results of financial operations in line with the requirements of this standard. So this is the summary one. As per my understanding, the Pakistan's reporting guidelines today require the summary one, which means that the minimum, the balance sheet, income statement, and some of the notes are required. So that is more or less in line with the what this standard is actually requiring. Again, as a standard setting, we normally try to keep things principle based. So the principle here is the relative significance. So the relative significance is the thing that is going to actually decide on that part. So, but as a regulator, and as an industry, there are a few things that actually go by the market discipline as well. That if some of the institutions actually adopt it by themselves, then others actually are encouraged because of the market discipline to actually go for that. But we, as a standard setting body, putting it would not be the best idea. However, you can provide your written comments on this one, as you've already mentioned that Central Bank of Pakistan feels that for their market it is quite important, particularly in considering the numbers of the banks and the windows that you have provided. You can provide comment on that. With regard to the second question, Brother Ghulam Shabir, actually the earlier standard, because you need to understand that our earlier standards were developed at the time when Islamic finance was evolving. Now we are actually we are nearly 2 decades ahead of that position. So at that point of time, there were situations that there were some banks that were actually offering only a single product. And this thing you can still find in some parts of the world there where only 1 or 2 products are offered by by a conventional institutions claimed to be Islamic. There are more examples that there are some countries where actually there were no licenses, and still that situation may prevail that there are no licenses for Islamic finance operations or Islamic finance windows. So the conventional institutions do this thing without having a license. What we are saying now is that earlier it was the standard was saying that for that product you follow AAOIFI standard, and you are right, absolutely right, that there is no regulatory regime to make it applicable. So it becomes like, you know, it is something going into waste. But what we believe now, what is the right thing to do is that we believe that even if you have a Islamic finance, you want to do some transactions without actually having a licensed window, is still what we believe there has to be a virtual entity. Virtual entity means that you need to segregate the funds on the lab, or if you have dedicated Sharia compliant assets, then you should have to segregate the dedicated Sharia compliant liabilities and quasi equity and equity to make it a virtual institution, even if it is not a licensed entity. But if you want to do Islamic finance transaction, you need to report them in this manner. That again, this is not a governance standard. The things will be covered more in the governance standard with regard to what needs to be actually done. And this is the responsibility of the regulators to get the licensing regime in place. But with regard to the accounting part, what we say that when you do Islamic finance transaction, it means that you create a virtual window and you need to segregate the whole operations of that virtual window separately. The virtual concept of having a virtual entity has been introduced in our framework, and actually IFRS also have some concepts like that, because even then IFRS also has the concept that at times the legal entity doesn't count. Actually, the entity is determined. The reporting entity concept is there in IFRS framework as well. So we clarified these things on the concept of virtual entity, which may apply in case of sukuk also, and also we have covered it in the virtual in case of waqf also. So with that, I'll go back to the sequence and we can take more comments. But there is one question answer session. Okay. The question is about the book of AAOIFI Financial Accounting Standards. The hard copy book is in publishing stage. We hope that we will be able to bring it in 2 to 3 months. We hope so. But during the last year, one major progress from AAOIFI was that we decided to make all our standards available online, free to read. So this is now a good opportunity for all of you who are interested in reading AAOIFI standards. You can always have access to AAOIFI standards online on a free-to-read basis. So this is a development during the last year, and actually this is something that was long awaited by the industry. A lot of people were asking us, but we were able to get internal approvals as necessary and do it during the last year. What I can suggest, Brother Syed and Sister Farida, if you can kindly provide a link in the chat window to the AAOIFI Accounting Governance and Sharia Standards. Brother Muhammad Khurram Shapir has a question. It's a general question, so let me take this question now. How will the Islamic finance and standards account for taxation? Accounting is actually understood to be neutral of taxation, which means that we do not actually go for any specific treatments normally with regard to the taxation. Regard thing is that there is one very important thing that we need to understand. That is with regard to AAOIFI's approach for standard setting. And I think it's important to mention here for the benefit of most of our participants. AAOIFI's new accounting standard setting strategy clarifies it very clearly that we do only the value addition part, which means that from the value addition perspective only, we will be working on development of standards. So where is the value addition? The value addition is in either of the two situations. If there is a specific Sharia requirement which may be contravened in case of following a conventional accounting standards like IFRS, in that situation we develop our accounting standard. The second situation is where the specific nature of Islamic finance transactions is different from the conventional transactions, and due to some of the core principles of Sharia, we need to account for them separately. We develop our accounting standards. So it means that in other than all these areas, with the areas which are neutral from Sharia perspective, for example, inventories, for example, property, plant and equipment, and for that purpose, including taxation, we do not develop accounting standards in these areas. Our framework says that in the event of AAOIFI standard being silent, you can refer to the generally accepted accounting principles as applicable in your market, which in most of the markets is IFRS. You refer to them subject to if they do not contravene AAOIFI framework, and subject to they do not contravene Sharia requirements. So with regard to taxation, property, plant and equipment, maybe like, you know, a lot of other areas where we have our IFRS which do not have a significant Sharia consideration, those are actually considered to be out of scope for development for AAOIFI, because we want to keep our things closer to IFRS aligned to IFRS as maximum as possible, but without any compromise on number one, Sharia, and without any compromise on number two, the specific nature and true nature of Islamic finance. So that's why we actually do not cover here. Brother Sayyid Imtiaz Abbas Hussain has an important question with regard to takaful. Brother Imtiaz, we have 4 existing standards on takaful, and all these 4 standards are now being revised in line with the new accounting practices, and we have already issued 2 exposure drafts on those standards. First one is on the general presentation and disclosure for takaful institution, and second one is on the accounting for measurement and measurement part, which is more in line with IFRS 17. So, so the exposure draft of these 2 standards have been issued. We are shortly going to have a series of public hearings, as well as hopefully we will be having some workshops and roundtables on them as well. So I would highly appreciate if you can drop an email or to accounting@aofi.com to just make sure that we don't miss you out at the time when those public hearings are conducted. So with that, now I will come back to where I was, and we'll go in the right sequence. With regard to the preface and objective and the significant changes, I have already explained. So if there is a comment, we can take that comment. Otherwise, we can move ahead. Comments for sure are welcome in this meeting as well as in writing as you like. Some of the questions I already responded, so let me.
There's a hand raised by Ms. Saira Tahir.
Okay, just give me a second. For one of the standards, the question is coming about Arabic. We have a policy that at least earlier all the public hearings were being conducted in English only. But now we have a policy that at least one public hearing for each standard is conducted in Arabic also. I believe my team will correct that a public hearing in Arabic has been conducted on Windows standard, this standard already. But the other standard, that is on interim financial reporting, is issued recently. So Arabic public hearing will be conducted shortly. We are holding at least 2 to 3 public hearings in English and 1 public hearing in Arabic. That is normally the policy. Comments are invited in both languages. You can provide your comments in Arabic also. We are going to issue unofficial translations of the exposure drafts for the public hearing and comments purpose for most of the standards. We are doing it now. So the hand raised, brother, you have mentioned about hand raised. So we have a question from Sister Saira Tahir. Can you please allow her to ask a question?
I think she's allowed.
Okay.
Saira, would you like to ask your question by voice?
Or you want to write it there?
Okay, that's fine. I think we can continue.
Oh, okay. Okay, there is one more question. There is one more question coming on the chat window, Brother Hassan Raza. Accounting standards follow almost all the same guidelines for recognition and subsequent measure reporting. Why we develop Islamic banking standards away from generally accepted accounting principles when can be done by few alterations to keep with global reporting? Brother Hassan Raza, this question is very detailed. The answer to this one, as I mentioned, that we do it only where there is a specific Sharia consideration, and only when there is the nature of Islamic finance transaction is different from the conventional one. I suggest you 2 suggested readings. The first suggested reading is our new framework, AAOIFI's new framework, which will give you some guidance about that. The second very important reading that can actually help you if you want to read this subject and understand this subject. AAOIFI has a publication called IFRS and Sharia-based reporting. This is available free to read on AAOIFI website, or you can order the hard copy to AAOIFI as well. But free to read soft copy is available at AAOIFI's website. I would suggest if you feel interested in this subject, I suggest you and anybody who's interested in this subject as to why AAOIFI standards are actually needed and why separate accounting treatments are needed. You may refer to that. Number one, as I mentioned, the new framework of AAOIFI, and number two, with the IFRS and Sharia-based reporting, which is a book published by AAOIFI to address this question. Let me just give one or two very quick examples to identify the differences. For example, according to Sharia, two contracts cannot be combined in one. If you combine two contracts in one, it becomes haram. Now the problem is that, for example, if there is a ijara muntahiyya bit tamlik transaction, which has one ijara contract and one promise to sale, according to Sharia, you cannot combine both of them. If you cannot combine both of them, and if you go to the true nature of the transaction, then it is known that according to Sharia, the risk and reward incidental to ownership of the asset till end of the lease, from inception till end of the lease, rests with the lessor. So, ijara muntahiyya bit tamlik transaction from Sharia perspective do not qualify to become a finance lease transaction. Similarly, we have a murabha transaction, for example, where you paid advance in cash to the customer or as agent, or through customer to the supplier, or directly to the supplier for purchase of goods which will be sold on a murabha basis. According to Sharia, till the time the goods are not actually physically received and sold, and their possession is not first taken by you and then not transferred to the second one, you cannot recognize revenue. So recognition of revenue on this part is illegitimate from Sharia perspective, and if you discalculate this profit and distribute it it will be impermissible from Sharia perspective. So these are just two quick examples. There is a long list actually in both the documents that I referred to. There is a long list of issues there are actually Sharia issues which are translated into accounting issues. And those are actually the reasons as to why we need AAOIFI accounting standards to reflect them properly. So further details, again, it's not the topic for today, but I believe this is a very common topic coming in the minds of our brothers and sisters from chart accountancy and similar professions. So that's why I just wanted to touch upon this one on a very quick basis. And as I suggested, there is a lot of material available from AAOIFI and from other resources for this purpose. There are actually a few comments on the chat window, but actually I will not be able to go to chat window every time. So request is that anybody who want to raise a question or comment on the document, they should be doing it on the question and answer tab, not on the chat window. With that, we move ahead. The objective of this standard is to establish financial reporting requirements for Islamic financial services offered by conventional financial institutions. The scope says that the standard shall be applicable to all conventional financial institutions providing Islamic financial services through an Islamic finance window, provided that such institution opt to apply the standard in its entirety. See paragraph 5 and 6. The standard shall not be applicable, A, when a conventional financial institution is merely managing Sharia compliant investment funds without constituting an Islamic finance window. Such institution shall follow the requirements of FAS 14 investment funds in respect of each of its funds for financial reporting purposes, and to a special purpose vehicle or virtual sukuk entity which is subject to financial reporting under FAS 34, that is financial reporting for sukuk holders. Any comments on objectives or scope? Okay, coming to the definition. Conventional financial institution is a financial institution performing banking, insurance, capital markets, and or similar activities that has no explicit, now this is important term, that has no explicit statement by virtue of a license and or by defined objectives in its constitution documents to comply with the Sharia principles and rules in entirety. Which means that if you have, on the other hand, if you have a license or defined objectives in constitution to comply with Sharia principles and rules in entirety, then you become a Islamic financial institution. Again, the definition is different, but I'm just clarifying the difference. So the issue here is entirety. But according to the definition of Islamic financial institution, or as per AAOIFI, a window is included in the definition of Islamic financial institution as per our multiple governance and accounting standards. Islamic finance window is a reporting, maybe virtual in nature entity comprising the Islamic financial services offered by a conventional financial institution through standalone branches and or divisions. Explanation: an Islamic finance window may be formed in compliance with Sharia principles and rules with or without any legal or regulatory requirements. Sharia principles and rules, as I mentioned earlier, are in line with, this is the hierarchy in line with our multiple standards on the governance and accounting side. So that when you say that you follow Sharia principles and rules, it has to follow the Sharia standards and these items in the hierarchy, unless the regulator defines otherwise. Do we have any comments on the definitions? Brother Ghulam Shabir, I hope the new definition actually for the Islamic finance window actually clarifies your part as well, that even a single product is not allowed, and even if you do it without licensing, you need to do it in line with Sharia principles and rules, which means that you need to identify the assets liabilities separately. This paragraph 5 we have quickly discussed earlier in response to query from Brother Ghulam Shabir. Do we have a comment on this one, paragraph 5? Either a full set of financial statements in line with FAS 1 or a summarized statement. Okay, we have a question. We have a question in the question answer tab from Brother Khurram Shabir. Sir, good explanation. I want to ask that Islamic reporting standards are also subject to local laws. Brother Khurram Shabir, this is always an issue, not only for Islamic financial accounting standards or AAOIFI's governance and other standards. Rather, it's an issue all over the world with regard to the contradiction between the local laws and IFRS. IFRS has this view, and we also take this view, that when you say that you follow our standard, you need to follow them in its entirety. So it means that if the local laws prohibit you to partially or fully comply with our standards, it means that you cannot claim that you are fully compliant with our standards. This is the same situation with IFRS. So again, this is not only us that are having this issue. Any standard setting body in the world actually have this issue, that at times there are some minor or major contradictions with the local laws. However, the approach that IFRS and we take is the same. We both say that if you follow our standards in entirety, only then you claim that you are adopting our standards. Brother Ghulam Shabir, you have raised your hand again, sir. Brother Ghulam Shabir, kindly go ahead.
Thank you so much, Masab. Sir, in fact, my comment is regarding when this exposure draft and later on it will become a standard. It's creating a question that any conventional bank can offer Islamic banking services without having any legal and regulatory framework involved. So, does this not raise some reputational issues if there is any Islamic banking window and it's not falling under the regulatory ambit? The regulator will not be able to impose its Sharia regulations on the Islamic banking windows operations of that conventional bank, irrespective of the volume of that Islamic banking window. So how do you look at this, and whether this, without having the legal regulatory framework, is it advisable to make this part of a standard of a very renowned standing body like AAOIFI?
Okay, Brother Ghulam Shabir, actually there are some countries where you will find there is no window regulations. Some countries you will find there are no Islamic banking regulations at all. Actually, there was a study that was shared by somebody. It was an old study, but it was that Islamic finance is existent in one or another form in more than 70 countries. But there are nearly 37, 38 countries that actually mention something about Islamic banking in their regulations or laws. So So this is a real life situation. Again, at the same time, that there are some newer countries that are adopting AAOIFI standards as well. We have our access to some of the Central Asian states and some other countries which are new countries. Their legal framework or regulatory framework is not yet complete. They are trying to develop their regulatory and legal framework by adopting AAOIFI and IFSB standards, etc. So the situation is that we are here defining something from accounting perspective, that if there is a Islamic finance window properly, then it should be doing this thing properly. I can give you example of even Saudi Arabia. Even in Saudi Arabia, the clear regulations are not there for Islamic banking segregation and Islamic banking window segregation. And there are actually situations, we discussed some of those situations in our last conference as well, which was on the Sharia side, that we discussed this topic related to window there as well. And we'll be discussing this topic related to window in our upcoming conference as well. And I can tell you that there were issues identified with regard to some banks, including Saudi Arabia and others. Again, Saudi Arabia as of now is not adopting our financial accounting standard. That's correct. But at the same time, there has to be some guidance available. We are not developing our standards only for those countries who have a very good regulatory framework. We are not developing our standards for those countries who already adopt our standards on other sides. Rather, we are developing our standards which have to be neutral. We take your point, sir, that you feel that there is a risk with regard to having that there can be a risk with regard to like not having regulatory approvals for that. But maybe, sir, at the same time, you need to see that Islamic banking industry, which is evolving in some of the non-Muslim countries, they are actually trying to do some products with some of the financial institutions just to make sure that at least Islamic Sharia compliant solution is available to the Muslim population in those countries. So we need to keep some option available. Again, Brother Ghulam Shabir, I'm just responding to your comment. For sure, we'll take your comment with regard to the reputational risk for having this thing. And again, when we mention this thing, we are not actually allowing this thing as AAOIFI. We are just saying that we don't know in different countries what type of a structure and regulatory situation is there with regard to licensing of windows, even in some of the Muslim countries and some other countries. There are countries where no regulation exists as of now. So we need to keep into consideration some of those possibilities. I think we have another question, brother.
We have actually 3 hands raised.
Okay, so there is one chat window. Let me take that comment first, and then we'll come to the raised hands. And the chat window, brother Imtiaz Abbas Hussain, most of the people make joke of financial statements of conventional financial institution having Islamic finance window, believing both are the same and un-Islamic as conventional finance. Contains gambling, interest, and uncertainty, which are haram, and creation of window just a business. So it's possible to separate reporting of Islamic finance window from conventional finance as the profit distribution among participants of the kafil, as they have no shareholder. And it's possible also attach Sharia advisor report then thereon just to create trust. Brother Imtiaz, no disagreement on this part. Number one, this standard requires the reporting to be done and accounts and figures to be kept separate, profit to be distributed separate, irrespective of whether you publish a full version of a report or you publish a condensed version of report. So with regard to segregation of funds, with regard to separate calculation of profit, with regard to the attribution of profits and returns to different stakeholders, these requirements are there. According to AAOIFI governance standards, Islamic financial institutions include a window. As I mentioned, we are also finalizing, along with our brothers from IFSB, a joint standard on governance for a governance framework for Islamic financial institutions. That also includes the window, a chapter on windows. So considering all these things from AAOIFI's perspective, it is very clear that when you form a window, the window becomes a separate institution within the institution. All the assets, liabilities, quasi-equity, equity, everything need to be segregated. Here in this paragraph, the paragraph 5, the division was with regard to only only whether you publish a full version of the financial statements or you publish a abridged version. But keeping abridged version versus full version does not mean that you have any choice with regard to keeping segregation of funds. So there is no disagreement on this part, brother. And to be honest, we believe that there should be full institutions and there should be subsidiaries, but we know that in a lot of countries there is a need for having windows, and we cannot just outrightly say that there should be no windows. But we believe that as the markets develop, the windows will reduce, number of subsidiaries and full-fledged institutions will increase. But as already mentioned by Brother Ghulam Shabir, there are markets like Pakistan where are 20 out of 22, 17 are windows. There are a lot of other countries where you will find that in Oman, I think there are 2 full-fledged banks, 1 full-fledged, 1 subsidiary, and there are like the maximum banks have their windows. So there are a lot of countries having this example, and this example has its own advantage as well. Even if you want to develop the market, you need to do it. In the takaful sector and in banking sector, in some of the countries, we have seen this thing. Because big players were not coming into takaful business, so the takaful business was not growing. Now that we cater to the need of the market, the need of the market is more and more takaful, more and more Islamic banking should be available. If there is not enough investment in full-fledged institutions, and there is a possibility that you can cater to that need through windows, it is good. And we hope that those windows can eventually be converted into full-fledged institutions. So again, there can be arguments on both sides. We take a note of your comments, sir. And from our end, I can assure that from accounting and governance part, we are making sure that all the requirements related to Sharia compliance, governance, financial reporting remain fully applicable on the windows. We were having some hands, so let's have listen to those questions. So there are first one, Ghassan Tilfa, Brother Ghassan Tilfa, please.
السلام عليكم ورحمة الله.
وعليكم السلام brother.
جزاكم الله خير شيخ على هذا أو هذه المناقشة، وإن شاء الله نطلع بنتائج مفيدة. My question, why you use virtual in the definition of Islamic window? Why you use the word virtual? Another question, we from our experience, mostly the conventional banks, they distribute the assets inside the bank. We find sometimes assets or liabilities in treasury, some of them in corporate, some of them in branches. This issue is very important in Islamic windows or Islamic departments. From my experience, we discover sometimes after 5 or 6 years, we have Islamic window, okay, but we discover that treasury also they have Islamic assets because they make syndicated deals or they finance murabaha or sukuk. For this issue, especially in UAE, we find there is no proper way to book the assets and liabilities of Islamic activities inside the bank. And another issue is the definition of the Islamic window, similar to IFSB definition, because they have, I think, also another definition for Islamic window. And thank you very much.
Thank you very much, Brother Hassan. Some very good questions. First, let's come to the Islamic window definition. The Islamic window definition will be slightly improved when we and IFSB together will be issuing the exposure draft shortly for the Sharia governance framework. Even yesterday, we were having a meeting with the joint Sharia committee of AAOIFI and IFSB, which is reviewing the exposure draft before it is issued to the market. So obviously, it's a very detailed document, but one chapter is included on Windows. So inshallah, things will be more aligned. That is part one. Part two, with regard to virtual, brother, we don't want anything to be virtual, to be honest. We want actually things to be properly regulated, segregated, and everything need to be done. We have very good examples from countries like Oman and Pakistan who have very good regulation on window with regard to segregation of funds. So all the funds are to be segregated, all the services which are provided by each other are to be identified properly. But we believe that we do not live in an ideal world. So even if there are countries which are just in the development stage and they need more and more guidance. So from AAOIFI's perspective, this standard along with the governance side requirements will be making sure that the window funds, etc. are segregated. Brother, why we are using the term window? Because even if there is a virtual window, because even if there is no legal framework for that, we are saying that you must segregate the funds. You must segregate the Islamic funds from the conventional fund. You must segregate the Islamic asset, Sharia compliant asset from the conventional asset, which include all the requirements. Not only this, we are saying that if there is a transaction between Islamic and conventional, like sharing of costs, sharing of services, like there is some placement of fund with each other, we avoid that. We from the governance point of view, we want it to be prohibited. But at the same time, we are saying that from the accounting perspective, irrespective, you don't have a proper window, you keep it separate. Brother, examples of UAE, example of, I was told example yesterday by a scholar about Abu Dhabi Commercial Bank, which has a large window, but everything is not segregated properly. In Saudi, we have NCB Al Ahli, which is nearly 80% Islamic now, but everything is not segregated properly. So even if the regulatory framework is not there, we want all these Islamic financial institution windows, Islamic finance windows, to segregate funds, segregate assets, segregate liabilities, and make sure that the financial reporting of the Sharia compliant part is done in accordance with the Sharia compliance requirements. So that is the whole purpose for that. Brother, with regard to the syndicate, this is a governance issue. And I hope that from the governance requirement, we'll be bringing some restriction that from the syndication. There are two things. One is we are developing a syndication standard, syndicated financing standard. There is a Sharia standard on syndicated financing, but we are also developing a governance standard on syndicated financing, which will make sure that the lines are very well drawn between Islamic and conventional. So the Islamic tranche is done by Islamic financial institutions, and which include the windows of conventional, but the conventional part is kept separate and there is proper segregation between the Islamic and conventional part in case of syndicated. Secondly, from the perspective of regular governance, we will be bringing some requirements from the Sharia governance framework, making sure that these things don't happen. Thank you very much, brother, for your very valid points. We are trying to incorporate them in different places in our different standards, and we are hopeful that we will be able to take all these comments to the respective boards to get better and better standards, inshallah.
Jazakumullah khair. Jazakumullah khair.
Thank you, brother. Then we have brother Jad Sarhan, please.
Bismillah ar-Rahman ar-Rahim. Thank you, brother, for allowing me to ask this question. I'm sure you've addressed it now many times, I can see. But just to be clear, we're a conventional bank operating in a Bahraini market. So under the Bahraini Central Bank of Bahrain rules. So what we understand is if you are investing in Islamic products, because in November 2020, the central bank said that we have to follow AAOIFI rules. So if you are investing in an Islamic product, i.e. not structuring or involved in the documentation or anything, then even that investment, what you are requesting us now is to make a judgment on the level of assets that we have, to have a separate Islamic book. Jazakallah khair. That's what I wanted to confirm.
Exactly, brother Jad. AAOIFI's accounting standards are mandatory for Bahraini market, but the Sharia standards have become part of law. So the problem with regard to window has been there that the governance standards were not applicable on window till now, and the regulatory framework for window is not clear in Bahrain right now. We hope that this is one of the situations where this type of standards are actually going to help in, because you need to now keep at least the book separate. Even if you do not, you need to allocate equity to that. You need to allocate maybe even current accounts to that, or other accounts to that. You may need to allocate an internal current account. You need to maybe create an internal current account, for example, between Islamic and conventional. What we are asking, brother, is that even it is going to be helpful for all regulators that all the Islamic book is identified separately and kept separately. With regard to the Islamic part, you have to remain compliant with the Sharia standards, with the accounting standard, and with the governance standard, which means that, brother, if I want to invest with, for example, Salam Bank, which is a full-fledged bank, or with Citibank, which is running a window, or Standard Chartered Bank, which is running a window, I should be having enough confidence that this window within this bank is actually equivalent to a proper Islamic financial institution. So my confidence level as a stakeholder and the regulator's confidence level as a regulator and supervisor remains there. So in a nutshell, yes, brother, the objective of this standard is going to do that. And as I mentioned more than once, that it will be complemented through the governance side. So once you will be eventually seeing the accounting and governance side together, you will be actually having proper segregation of funds and proper segregation of assets, liabilities in a manner that the window then will be equivalent to a proper bank, proper Islamic financial institution. That's what we want. That we believe that it might not be possible today to ask each bank not to do Islamic unless they have a subsidiary. Rather, we can strengthen the regulations and reporting and Sharia compliance requirements for these in a manner that they become equivalent to that. And I can tell you that we have some very good examples of that on the regulation side. Oman and Pakistan are two good examples. Even in Malaysia, there are some good requirements on that, and there are some other countries. But still, you can see a country like Bahrain, who is in a very advanced stage of Islamic finance, very mature market for Islamic finance, but still the windows are not very very properly regulated on this part. Only the Sharia standards now become legally applicable. So that is the most important part that has been faced by windows now. Otherwise, the windows were not having a clear framework, even if Bahrain is considered to be a very mature market. We have Brother Abdul Halim Yahyavi. Brother Abdul Halim, please.
Brother Abdul Halim, are you there?
Okay, let's move ahead and we'll take his comment later, inshallah. I think he's away or maybe not. Brother Imtiaz Abbas Hussain has brought in a comment again on the chat, on the question answer tab. He says that to introduce and encourage Islamic finance, would it introduce the window concept to start it, which is excellent. It's possible that standard be made to restrict time frame. Brother, we develop global standards, and from our perspective, we cannot put a time frame on a global basis. So it will be subject to regulators. We know that Qatar initially started with windows, and then later they asked all the windows either to close or to convert into subsidiaries or full-fledged institutions. So there can be these sort of measures, but these can be taken only by the regulators considering their local market. Not only this, for example, you can take example of Pakistan, where Takaful did not initially allow window. And it was allowed after 5-7 years because the market was not growing at that level and the local Takaful participants wanted to come in. So it can go other way around as well. I have few more examples where we can see that windows have actually helped in developing the country's Islamic finance very well. Bank Muscat Mithaq is a very good example in Oman, which has been the largest and the leading bank. Even they started before official licensing regime, they actually started with 1 or 2 of the products. So considering this thing, if you ask me, I want not only windows to be converted, I want all the conventional financial institutions to be converted to Islamic. This is something coming from my heart. But at the same time, we need to understand the realities of life. And in those realities of life, one of the very important aspects is to make Islamic finance available and to let it grow. And for that purpose, the regulators are the right bodies to decide whether they want to put a restricted time frame or not. What we can do as a standard setting body is to ensure the minimum criteria, the minimum governance requirements, the minimum Sharia requirements, the minimum financial reporting requirements that should be applicable to ensure that Islamic finance windows work in line with Sharia. Let me move ahead. So financial reporting model for Islamic finance windows. A conventional financial institution may offer Islamic finance services on a standalone basis without having separate branches, divisions or windows. In such cases, if the group of similar Islamic finance service transactions constitute identifiable Sharia compliant assets on one hand and identifiable Sharia compliant liabilities, quasi-equity and or equity on the other hand, then the conventional financial institution shall consider such group of similar transaction and balances to be in the nature of a virtual Islamic finance window and shall apply the requirements of this standard in respect of such Islamic finance window. This requirement, however, shall not be applicable in case of absence of a dedicated Sharia compliant liabilities, quasi-equity and or equity allocated against identified Sharia compliant assets. We have discussed most part of it, but again, we can take comment in as we go through. Selection and application of accounting policies. An Islamic finance window shall select and apply the accounting policy in respect of recognition, measurement, and reporting of its operations separately from conventional operations in line with the hierarchy of selection of accounting policies as described in paragraph 7 of AAOIFI framework, which is that you first have to go to AAOIFI FASs, then you have to go to if no AAOIFI FAS is available, then a similar FAS. If it is not available, then to the framework. And then generally accepted accounting principles if they do not contravene the framework. For the purpose of selection and application of accounting policy, the materiality shall be determined with reference to A, the quantitative data of the Islamic finance window only, and the qualitative characteristics of Islamic financial services offered. So, for example, you can say that, oh, Islamic finance is only 5% of the size. So you can say, oh, it's not material for us. But here we are saying that for the purpose of materiality determination, the Islamic finance window will be considered a separate reporting entity. So the quantitative data of Islamic finance window and the qualitative aspects of the Islamic financial services offered will be considered for the purpose of determining materiality for the purpose of reporting of the window. So it means that for the purpose of window, you will be having nearly a full set of financial statement, even if you publish a smaller set of financial statement, but you will be required to do full accounting for the window in an appropriate manner. Presentation and disclosure. An Islamic finance window shall select and apply the accounting policies in respect of recognition, measurement, and reporting of operations separately from conventional operations in line with requirement of paragraph 7 in the hierarchy. I think this is duplicated. Confirmation of compliance with AAOIFI FAS. The financial statement of AAOIFI of an Islamic finance window shall include an explicit statement confirming compliance that this standard has been followed in its entirety. So this is one very important aspect that we are asking, that this standard, and again, this standard is referring to other AAOIFI FASs. So it cannot happen that you say that, okay, we just did accounting for Islamic finance only for 2 products and everything else is as per the accounting policies for the conventional. If the accounting policy of the conventional is neutral, is Sharia neutral, then we don't have a problem. Like property, plant, and equipment, you can have the same policy for if you have by chance any inventory. And on the conventional side, normally you don't have any inventory, but in Islamic you can have an inventory. You can have intangible assets. You can have other assets where there is a neutrality with regard to Sharia. In that situation, you can follow the same accounting policies of the conventional. But if the neutrality is not there, then you need to follow the AAOIFI FAS with regard to the transactions rather than going to the IFRS or other generally accepted accounting principles that are applicable in your respective country. An Islamic finance window shall make an explicit statement with regard to the governance framework applicable thereon. For example, the requirements of AAOIFI governance standards and a brief of Sharia governance structure in absence of an established governance framework. It shall also disclose if it applies a set of Sharia principles and rules different from those defined in this standard, duly considering the hierarchy referred therein. So the point is that that if earlier standard was asking to have a Sharia board and to follow the Sharia principles and rules that are defined by the Sharia board, which is actually a governance requirement, not an accounting requirement. So we clarified and changed it in a manner that now it's actually a disclosure requirement. Now this disclosure requirement, which is a qualitative disclosure, not a quantitative disclosure, but considering the importance of Islamic finance window financial reporting, this is very crucial. That window should be identifying that whether or not it is subject to an established set of governance framework, for example, AAOIFI governance standards or the regulatory Sharia governance framework of respective countries. Or it shall disclose, if it is not very clear, then it shall disclose what a summary of the structure, governance structure that it has. It needs to mention that it has a Sharia board or a Sharia audit is happening and a Sharia compliance function or whatever Sharia governance framework is there, it needs to mention a brief about that. So if it is referring to AAOIFI standards or the country regulator Sharia governance framework, then a brief is not needed. But a brief is needed if an established governance framework is not there, then a brief is needed. For example, so if there is a window working in like in a country where there is no regulatory framework, then in that situation, the window shall be identifying either it's following AAOIFI governance standards for the purpose of having the governance framework, or it is actually having a separate governance structure in line with whatever requirements are there. This is important as a qualitative disclosure for the purpose of the Sharia conscious users of the financial statements of the window, who need to understand as to whether and to what extent the operations are conducted in line with good practices of Islamic finance. Similarly, the second part is with regard to the hierarchy of Sharia principles and rules. So if the hierarchy as defined in this standard is followed, that means that they are following the AAOIFI Sharia standards and country Sharia regulation, etc., and they are following it as it is, then it's no, they don't need to go for details. But if they are using a hierarchy different from this one, they need to disclose it, because in that situation, the Sharia conscious users of financial statements of Islamic finance window might be actually in need of understanding with regard to the rules that are being followed, the set of rules that is being followed, and because this may impact their decision making with regard to investment and dealing with this institution. General disclosure requirements also include the disclosure of any Sharia non-compliance transaction in line with FAS 1. Including funds and assets pertaining to Islamic finance window being commingled with the funds related to conventional operations, along with the movement thereof being during the period, and as to how such non-compliance has been resolved. So again, as I mentioned, this is an accounting standard. We cannot say you cannot commingle fund. Again, we know that from Sharia perspective, it's not allowed to commingle fund. But if the funds are commingled, and we know that it has been a common practice around the globe, so we just want to make sure that if these are not commingled, and if it has commingled, then it needs to be disclosed. I can see hand raised by Brother Ghulam Shabir. Brother Ghulam Shabir, please.
Sir, thank you so much, sir. Can we go to the previous slide, please?
Sure, brother. This one?
Thank you so much. Thank you so much. Yes, one. With regard to this point number 11, foreign institution where there is no regulatory requirement with regard to Sharia governance structure. I was just wondering whether this standard prescribes minimum kind of disclosures with regard to Sharia governance they should disclose, like I mean the Sharia board, their remuneration, their Sharia board report, maybe.
Thank you, Brother Ghulam Shabir. The idea was not to make it the primary disclosure. The primary disclosure is that they just need to mention whether they follow Sharia standard, or like in Pakistan, your Sharia governance framework, or in Oman, in UAE, in Saudi, those countries are having those frameworks, so we can just refer to that. So this was the whole idea, but we said that in absence of that, they should do it. But now I can take clue from your point that what would this brief be about? So maybe we need to put a further clarification on this point, that in absence of that, the minimum brief is this. Is it okay?
Thank you so much, sir. Thank you.
Okay, brother. So we take a comment from that and we can provide some further, like, a further disclosure requirement, either in the body text or as a footnote, we can provide something to explain this. Coming to point B, the legal, yes.
There are a number of hands raised. If you would like.
Okay. So let's go. Oh, okay, sorry. I couldn't see the hands. So let's go one by one. So
Brother Halim has raised again.
Yeah, Brother Abdul Halim Yahyavi, please go ahead. Brother Abdul Halim Yahyavi, can you hear me?
Okay, we can go to Dr. Ilyas.
Okay, Dr. Ilyas, please.
Dr. Ilyas, you're allowed to speak. Okay, Dua. Ms. Rashta. Ms. Rashta, do you have any question? Would you like to ask by voice?
Yes. I hope there is no technical glitch. I hope so, because somehow all of them are not responding. So, Sister Rashda, please.
When you give an invitation to unmute, people accidentally click on cancel. So.
Okay.
Omar, I live in Bombay, and for a very long time, over the last 10 years, there was a lot of plans to have the the window model, where you put in a conventional banks also were planning to offer the Islamic banking finance window as an option for their banking governance. I mean, the products, as well as separate international banks were planning to open full-fledged Islamic banks in India. But the plans obviously got shelved for reasons. But considering the fact that this is something that is still on the cards, how would it play out in a country where interest is the basic model? And in terms of having genuine governance, even if a local bank starts an Islamic banking, it goes for the model of a window. I see a lot of governance issues happening, despite and whether or not those can be catered to in respect of just the standards that have to be followed with IOFI.
Okay, welcome, Sister Rajda. First thing is that when we develop standards, we try to be country neutral and environment neutral, and we try to incorporate different sort of environments in the standard. But we cannot say that it is done for a specific type of country, and that is the reason that we kept the option for regulated as well as unregulated. Again, this is the strategy issue with regard to India in particular, because we well understand that India has its own peculiarities. It is the second largest Muslim population, and some people say it has the largest Muslim population in the world. Again, that is not reliable, but at times it can be. It might be correct that at least second largest Muslim population in the world. So it means that that there have to be solutions. Again, politically, there are issues. We know that the solution it cannot be proposed by standard setting bodies. What standard setting bodies can do, sister, is to keep flexibility in the model with regard to those countries where again, you mentioned about interest is prevailing. Actually, interest is prevailing even in Muslim countries. So this is something that we are stuck with. So issue is not primarily interest. There are a lot of non-Muslim countries which are now which have progressed significantly on Islamic finance because of number one, having a reasonably good Muslim population that was interested in that, and secondly, because they were having very good regulations and systems. UK is one of the good examples. Even France have it at a good stage, but I think UK is one of the best examples there. Even it's like sort of a hub for a lot of transactions. So the opportunity is there, and it's more about the political will. What I can tell you in my humble view is that even if there are no regulations, but reading this standard with other AOFI relevant standards, along with the governance standard that I am referring to several times, that is coming up as a joint project between AOFI and FSB, I can tell you that the minimum requirements are there. Again, till the time the regulators is not in support, and till the time because it's not only about the regulation related to this issue. Actually, there are regulations related to accounting. There are regulations related to impermissibility of the transactions, like the banks are not allowed in most parts of the world to do a trading transaction. So if you are not allowed to do a trading transaction, how you can execute a murabaha? So there are so many issues with regard to that, but in a nutshell, what I would say, that there can still be solutions. And from our responsibility perspective, we are trying to keep flexibility of those markets that do not have a regulation, or that cannot have a regulation available in the short period of time. So with that, I would say that further things are actually not in our hands, but as AOFI, we can assure you and all our colleagues, brothers and sisters from India, that whatever support you need to in order to develop something on Islamic finance in the country, please feel free to approach us. We will be more than happy to cooperate and provide support as possible.
Just to
Brother,
there are many institutes who are now trying to provide off-banking Islamic finance solutions for people, the general population.
Microfinance institutions, I can see more, and some investment funds, etc. I can see, but the real banking solution, I think, is still not there.
It's not, no. Thank you, Jazakallah khairan.
Okay, Brother Abdul Halim Yahya, now we are coming back to you again, and we hope that you will be able to actually talk this time. Brother Abdul Halim Yahyavi, my apologies, I don't know what is happening with you every time. Dr. Ilyas, please. Okay, you removed your hand. We have Brother Abdul Awwal Sarkar. Brother Abdul Awwal, please.
Assalamu alaikum wa rahmatullah.
Wa alaikum assalam, brother.
I'm sorry, always I enjoy your deliberation. Very nice, lovely, and I like your lively discussion. I think that there is no full stop. Your discussion is very attractive to me. So whenever I get chance to know your lecture, then I try to attend.
But thank you, sir. Thank you very much. We are honored, sir.
One question I found in the question answer section, that the window based Islamic the banks, the conventional banks which have windows or Islamic branches, they alongside with their interest based banks, they in Bangladesh, they also report, they show their report differently in the separate balance sheet. In the same annual report, you will see that the performance or the activities of these banking branches or windows of those conventional banks, they show their activities separately. So there is no confusion about their performance. One of our participant of this session, he asked this question to you, but I have answered that in Bangladesh, this is not a problem.
Thank you very much, brother. Thank you very much, and thanks for joining us, and thanks for your all support that you have been providing to AOFI. And as I always mention, that we believe that Bangladesh has a great potential for Islamic finance. The way the Islamic finance market has grown and the way the economy has grown, it is actually one of the best examples of Islamic finance, particularly because the country is not officially supporting Islamic finance to that extent, but the way the Islamic finance market has grown and surpassed so many other markets which are considered to be comparatively larger markets is actually
Yes.
commendable. Thank you again, sir. We have some questions in the question answer chat window. So let me first take them and then come back to this point to try to take some questions live. Brother Ishtaq Farooq is there. Are we aware that a case on riba is pending in Pakistan? It's very important the case is decided. Certainly no courts will ever declare riba as legal or admissible. We are asking SBP to segregate the conventional Islamic business to be separated, but government is not responsive. The rule regulations are not uniform in the Islamic world. Sharia standards support business of world that is not Muslim. In Pakistan, a law was made in 2007. The riba is not only haram, but a crime as well. The government is not implementing that. The law segregating assets of Muslim world, this needs to be above realities of life. My question relates to all Islamic practices and institutions. I expect detailed comments on which may also be transmitted in writing, please. I offer to explain things about the law if required by policymakers. I'm certain that AAOIFI has never touched the law. Prohibition of private sector money lending law of this. Okay, sir, let's take one thing is very specific to Pakistan. Probably Pakistan is only country that actually there were 3 countries in 1980s that tried to convert completely to Islamic finance and Islamic economic system: Iran, Sudan, and Pakistan. Pakistan has it written in its constitution that the government will take all measures to eliminate riba from the economic system. Going about the court case and all these things, these are a few things which we cannot comment here. But in a nutshell, we hope and we pray that not only in Pakistan, but for the whole Muslim Ummah, we are able to get, as a Ummah, we are able to get exit from this this conventional banking system, which is based on interest. I believe that it's not only a religious responsibility, but it is also important for the economic development of Muslim countries that we come out of this cycle of interest. But further comments again, the private money lending, actually the private money lending becomes a joke actually, because if you become a banker and you are big enough to do lending based on interest, it is permissible activity. And when you do private money lending, it's impermissible activity. So if you are a big thief, then you are allowed to do the theft. And if you are a small thief, you are not allowed to do the theft. So this is again, riba is riba, and it should be prohibited in its all forms. Next question, we have Sister Amna Ali Sayed. Would such commingling of funds count as a non-compliance, and shouldn't this be treated via a current account like a head office account between conventional and window? We are talking about 2 different things here. Number one, keeping the funds segregated and transferring them through a current account or a clearing account at day end. This is something which is not considered to be commingling. Commingling is considered where actually the funds are commingled. So the commingling is actually a non-compliance. But we will take a clue from your comment and we'll try to clarify this thing more clearly in that standard. So Sister Farida, if you can take a note of this point, that we need to clarify it more clearly, and maybe we need to clarify it more in line with the joint standard of AAOIFI FSB on the governance side, which is being finalized, which is putting some restrictions on these things. So anyway, we are not permitting commingling of funds. We are not commingling, but this is an accounting standard which says that if commingling happened, then you need to address that. So I think I have answered these questions live. Okay. There is a comment from somebody from probably Russia or Central Asian states, because I can feel that the name appears in Russian. So where can I buy a book of AAOIFI Financial Accounting Standards in Russian? The quick answer is that the existing version is available. It was published in collaboration with Russian Grand Mufti Council. You can drop an email. You can drop an email to the secretariat. You can drop an email, brother Sayed, if you can provide the link for the existing books availability. So those can be ordered. Actually, it can be ordered on AAOIFI website as well. But if we can provide email of our colleague, brother Salama, or any other relevant colleague who can actually provide this one, So it will be the only thing is that the Russian book available is not having all the updated standards. Updated standards are available right now only in English on website, and some of them are available in Arabic. We are trying to fill in the gap as soon as possible, but the existing standards are available.
Sure.
My apologies. One thing on the accounting standards in Russian are not available. My apologies. That is a project that we started with some colleagues, and that is in pipeline. I mixed up with the Sharia standards. The Sharia standards are available. Accounting standards will be available soon, we believe, within 6 months to 1 year time, inshallah. My apologies for that. I mixed up the two.
Maybe you can add the SEPA translation.
Yeah, that is a good point, Brother Rizwan. Thanks for reminding. Our Certified Islamic Professional Accountant program is also being translated into Russian and is going to be offered very shortly. We are thankful to Islamic Development Bank for supporting that initiative, and inshallah, it will be available. It is an advanced stage of translation and finalization, and the SEPA Russian program, I believe, will be available by mid of next year or maximum by end of next year, inshallah. So this is one of the important initiatives. Thanks, Brother Rizwan, for reminding. Now, coming back to the participants who have raised their hand, we have Brother Asim Nadeem. Please go ahead.
हेलो अस्सलाम वालेकुम।
वालेकुम अस्सलाम।
जी डॉक्टर साहब, मेरा क्वेश्चन है IFRS 16 से रेलेवेंट। May I ask this question?
Yeah, sure. Please go ahead.
Yes. An Islamic financial institution conduct a Sharia compliant transaction like obtain a property on rent. This is a Sharia compliant transaction. But IFRS 16 forced to report as an asset and a virtual liability against said property. And rental payments are to be divided in two parts. One is principal payment and interest payment. Is this a non-compliance of Sharia rule, or we can adopt IFRS 16?
You are the lessee or the lessor?
Bank obtains our rented premises.
Okay, so you are lessee here. You are lessee.
Yeah.
Okay. Okay, brother, I can well understand the question is coming from Pakistan. In Pakistan, there is local Islamic Financial Accounting Standard number 2 applicable on Ijara. That standard number 2 on Ijara is equivalent to AAOIFI standard FAS 8 on Ijara. More or less the same accounting treatment is there. But more recently, we have developed Financial Accounting Standard 32 on Ijara. The 32 standard number 32 on Ijara replaces the Financial Accounting Standard number 8, which means that that the equivalent standard of IFAS 2 has been withdrawn by AAOIFI. Now, the problem that you are facing right now is that in Pakistan, AAOIFI standards are not adopted. The newest and these standards are not adopted. The local standards were there. We have been talking to ICAP and SBP on at different times, but this is a very important issue that you raised. So the issue here is that if you follow the AAOIFI FAS 32, you have a solution to that, and which is a Sharia compliant solution. In a nutshell, AAOIFI FAS 32 is closer to IFRS 16, but it is not exactly as IFRS 16. Let me clarify. So the standard number 32 has the lessee side accounting very close to IFRS 16, but the lesser side accounting is more closer to the operating lease accounting of IFRS 16. So a lot of people will feel that it is not consistent with IFRS 16. Again, as I mentioned earlier, the reason is because Islamic finance transactions are different in nature, and the real relevant risk and rewards and the contractual responsibilities of parties is different. With regard to the lessee accounting on Ijara for a rental premises, for example, our treatment is closer to IFRS. However, we do not believe in this transaction having an interest component. Rather, we believe that according to Sharia, the manfa'a or the usufruct of an asset is equivalent to mal. It is tradable. So according to FAS 32. If you acquire the right of use asset of an asset, the right of use asset of a tangible asset, in that situation, you can recognize that right of use asset. Earlier treatment under FAS 8 was that it was like operating lease and you were going to charge only the monthly rentals. But now, according to the new standard, for long-term transactions, not for short-term you can still have the same, but long-term transactions, you need to follow a treatment which is closer to IFRS. But the difference is that we believe that there is the total rental has a deferred profit element as well. So that element is again we believe in time value of economic resources. When Allah subhanahu wa ta'ala said that riba, so Allah subhanahu wa ta'ala permitted trade and prohibited riba. And yaquluna innamal bay'u mithlu riba, that there are some similarities to that as well. But Allah subhanahu wa ta'ala allowed one of them and disallowed one of them, which means that the economic realities of both transactions are different. So here we also believe that the economic reality is different, although we brought the treatment very close to IFRS. But we again, just to clarify, all AAOIFI accounting standards are reviewed by the Sharia committee of the Sharia board as well. So we discussed at length this issue of manfa and its equivalence to an asset, its capability of being recorded as an asset, and its capability of being traded. And after all due discussions on that part, we came up with FAS 32. Solution, if you ask me, solution is adoption of FAS 32. Again, the accounting standard board is here, the SPP is here. As industry, you guys need to talk to the respective regulators and bodies that they should be considering adopting these standards for the pure Islamic finance transactions and the Islamic financial institutions. Okay, so do we have any other questions from the participants? Brother Abdul Hamid Abu Sakri. Okay, no. I can see every time the hand for Brother Abdul Halim Yahyawi, but I'm not sure why he's unable to talk. So let him give an opportunity again to talk.
Brother Abdul Halim.
Okay, Sister Rajda.
Assalamu alaikum warahmatullahi wabarakatuh. Point C, the description of how a deficit in respect of capital solvency and accumulated losses will be covered by the Islamic finance window. Now, definite deficits, even in terms of fraudulent transactions or those that have been identified that are being investigated currently?
In a nutshell, what I would say that normally the regulatory frameworks do not define that the capital solvency requirements, etc., separately for the window. So we believe that particularly for Islamic financial institutions, it's better to keep the capital and solvency requirements separately for the window. And particularly, this standard is applicable on all institutions. It's not for banks only. So particularly the solvency requirements of Takaful, we believe must be kept within the window in order to make sure that, each and every rights and responsibilities of different stakeholders are kept properly. The solvency requirements should be met within the window. That is our understanding. But again, we are not. This is the accounting standard only. So here we are just asking about the disclosures in this respect. We are not saying that it should happen this way. That would be a subject of the governance standard.
All right.
Okay, there is one more question answer. Sheikh Isam Masalkhi, please, Sheikh.
I think there's an incomplete question. I don't think he has raised a hand.
I think he wants to talk. Brother Sheikh Isam, you want to talk? Brother Ghulam Shabir, you want to say something, sir? Your hand is raised also. Yeah, please.
Sir, thank you so much, sir. My apologies, I was not around for a while. Maybe you have explained that. My question is regarding disclosure of Sharia non-compliant expenses, especially. What do we mean by this expenses? Sharia non-compliant expenses.
we hope there should be no Sharia non-compliant expenses. But if something happens, which is identified by the Sharia board that this is something impermissible, then it should be. For sure, we know that the issue is main about income. But if anything which happens as a Sharia non-compliant income, for example, there is a marketing expense which the Sharia board decides that it is impermissible. Another example can be that there is a compensation for interest rate. Now again, if it is as per policy and as per approved principle, then it's okay. But otherwise, it can be permitted. It may be termed as impermissible by the Sharia board. So there can be different situations. So it can be, for example, a marketing expense. For example, it can be a compensation for a loss in profit or a difference between the interest rate. It can be again, there is if there are gifts, etc. Some of the gifts, etc. may be termed impermissible, particularly to current account.
Thanks so much. Thank you.
Okay, so quickly let's go through this one, and it's a very good interactive session, alhamdulillah. The number of physical branches being part of Islamic finance window and other means and mediums offering such services. Disclosure of Sharia non-compliant income or expenses related to Islamic finance window and a description of how such income has been or will be separated. Significant accounting policies applied for preparation and presentation of financial statement of the window only when these are different from the conventional financial institutions' overall accounting policies and or are specific to Islamic finance window. Disclosure with regard to significant risks faced by Islamic finance window in line with the requirements of FAS 1, including in particular requirements related to capital adequacy, insolvency, etc., as applicable. Any guarantees, undertakings, pledge or charges or any other form of non-monetary financial support provided by or to the Islamic finance window or from the conventional operation or shared collectively with each other along with the respective nature of the contract. So this is some area which is a gray area between Islamic and the conventional counterparts. So it needs to be disclosed properly. Placement and or investment under different modes of Islamic finance with or from the conventional operations and movement thereon during the period, as well as any returns thereon and the maturity profile of such transactions, and the amount of expenses and costs shared between Islamic finance window and conventional operations, along with the nature of material expenses and costs and the basis of allocation of the same, for example, a management agreement, service contract, or cost sharing agreement. Brother Ghulam Shabir, you have further comments on this, or your hand was raised earlier?
Yeah, thank you so much. My question is regarding placements and or investment under different modes of finance from conventional operations. How is this possible?
The conventional operation can provide you under even a wakala mode, or even under a ijara mode, or even under tawarruk mode. Again, we do not prefer this to be happening either side. But one thing is there, sir. According to most of the scholars that we have seen, placement with conventional is either because mudarba placement or musharaka placement or wakala placement with conventional is not possible because there are haram activities. Only placement with conventional is possible either through a repo or similar transaction or through tawarruk transaction. This is also something which is not preferred as per Sharia. According to AAOIFI standard, the AAOIFI standard on tawarruk, you cannot even be placing to conventional financial institutions through tawarruk. So in a nutshell, there is some remote possibility. But on the same side, if Islamic Bank has limited financial resources and it has a bigger asset book, or for example, if there are sukuk available in market and they want to invest in sukuk and they need to borrow from the conventional for the time being, it can be done through a current account for sure, but at times it is done through a mudarba account or a wakala account or any other. Again, we do not want to promote these activities. When I'm mentioning these examples, the idea is not to promote it. The idea is only to mention that this is actually happening and this should not happen on an ongoing basis. But this is a disclosure requirement. So if it happens, it must be very clearly disclosed. So that all the stakeholders are aware about this.
So my relevant question, relevant question is that whether this transaction is between a conventional arm and Islam banking arm of the same entity? What is this clause is about?
Yeah, this one is about that. And again, if you ask me from the governance and Sharia perspective, it should be prohibited. But we know that these things are actually happening. So here we are just asking about adequate disclosure of the same. I know that in Pakistan you have seen some very bad example of this thing. I know that, and if you want to if you want to prohibit that, I am in favor of that. Actually, the governance is the one which is being shortly being issued. It is actually going to prohibit it as an exposure draft at least. Then we'll see how the market responds to that. But in a nutshell, this is a accounting standard and financial reporting standard. So if something like this happens, it just needs to be disclosed here.
Sir, my question is regarding from the aspect of accounting policies and framework.
Yes.
Whether such kind of transaction be promoted under good accounting practices, that an entity, a legal entity, which is just single entity, but it's entering into a transaction with its arm, which is sort of virtual arm, and Islam banking is not a legal entity within that conventional banking institution as such. So whether this should be promoted in the accounting standards and the accounting good governance practices?
Sir, this is something, Brother Shabir, this is happening, something happening in the market. We have lots of examples of that. Here we are just asking for the disclosure that if it happens, you disclose it with all details. But as I mentioned, that the governance standard would be probably putting a restriction on that, prohibition on that. So we don't have a disagreement with you on this, that this should not happen. There is no disagreement on that. Again, the standard is a global standard. It has to take care of so many different markets. And we know that these things are actually happening in different markets. Okay, effective date will be 1 January 2023. Or probably it will be like adopted along with FAS 1. With that, actually, it will be superseding FAS 18. So with that, actually, we completed discussion on first one. Brother Farooq, you want to say something?
Well, I like more trying to understand from a conceptual standpoint. The requirement in this standard is principally asking to attach another set of financial statements, which is based on the AAOIFI standard, and where there is window, those financial statement needs to be attached. So that is really the principal, requirement coming out. The rest are the disclosures, further explanation what is to be included. So I was just wondering, like say in Pakistan, we have window in banking sector as well as in insurance. For banking, the approach is that there is an additional note that is given within the financial statements of a banking institution. Whereas for insurance, which has the Takaful window, a separate set of financial statements are also attached. But having said that, it is the same legal entity, whether it is a banking company or an insurance company, the legal entity is the same. And at the end of the day, the financial statements has been given a particular framework based on which both the financial statements are prepared. So as far as the insurance companies are concerned, where there is window takaful, I think the accounting requirements for takaful are clearly spelled out, and the financial statement that are incorporated within the four walls of the legal entity or the separate set of financial statements are the underlying accounting is the same. Whereas for the banking, as I understand, for the combined one financial statement of the legal entity, the framework is different. And if we go and adopt and do a financial statement separately for ring-fenced window, the underlying transaction recording will be different. So I was just wondering, how practical is it to maintain two books of accounts? Like there will be a separate really, because for a consolidated entity, the framework is different. Here for Islamic transactions, the framework will be different. So, looking at the size of the transaction and the volume that is emerging in Pakistan and maybe in other jurisdictions, how practical? Have you done any kind of a study? Where is this really practical? I understand where, like for companies which are US listed, you have a US GAAP, there is some conversion or, on certain accounting differences, you can convert it. But here, what I understand is it's a complete financial statements which are publicly going to be published, and the whole framework is different. So I'm just wondering, how practical is it?
Thank you very much, Brother Farooq. And I think it's a very valid question. Actually, we are struggling with this one. Even there were issues with regard to, some disclosures we wanted on the other side as well. And our board decided, no, you cannot put any disclosure on the other side, because even if your standards are adopted by the regulator, they will be adopted only for the window. So although we felt that one or two disclosures are very important on the other side also, but it was decided that it gets out of scope for you. Brother Farooq, actually, you might have heard today some people saying that windows should not be there, or there should be a time frame to let all the windows be merged into converted into full-fledged institution, etc. Actually, window is a weak area for Islamic finance. We believe that there is a need for it, and that is the reason that all regulators are actually, majority regulators are allowing. Some regulators are still not allowing, like Jordan not allowing. Qatar allowed earlier, but they decided not to allow. Every time when we hold like our governance board meetings and others, even yesterday in the Sharia committee, we were presenting it, and one of the senior scholars who is member of our board and FSB board, he said that we should do away with windows. Windows should not be there because there are so many issues. So, brother, the objective here was to define something at a minimum to keep it separate. Now, the problem is that if you keep, as the example of takaful is easier, because in takaful we say that insurance business is risk sharing business and trade business, and takaful business is risk sharing business. So what you do, that you just take the net results of takaful business and incorporate in your balance sheet, and then you go ahead. To be honest, on the banking side, this thing is not clear. But my issue as of now is that I am doing standards only for the Islamic side. If I was the regulator and I was developing the standard on both sides, in that situation, maybe I would take a plea similar to that you mentioned about takaful, that you do not integrate each of the caption with each of the captions. Rather, you take the Islamic banking operation net assets, net liabilities, the total assets, total liabilities, and net return from operation like a associate. If you ask me, I would prefer an associate accounting, to be honest. If you ask me, but right now, our accounting board is developing the accounting on one side. On the other side, we do not have a domain. We do not have a mandate. But if you ask me as a regulator, if I'm just by chance sitting as a regulator doing both things, to me, as I said, that window becomes a virtual entity. When it becomes a virtual entity, it becomes a reporting entity. Even IFRS has the reporting entity concept. When the stakeholders of the institution are different and the information needs are different, then at times some of the non-legal, I won't say illegal, non-legal entities that are not a legal entity, they can be considered a reporting entity. For us, window is a reporting entity. If you ask me, maybe as a regulator, I would go, if I develop myself a standard on both sides or accounting regulation for both sides, maybe I will end up, as my personal view, as that having a associate accounting in case of Islamic window, and not consolidating. This issue that you are mentioning, brother, equally applies on consolidated financial statements of the conventional institution who own an Islamic window. Islamic subsidiary, not even a window, subsidiary, because the same issue will apply as to how you are going to club line by line. So these issues, yes, we fully agree. These are very valid issues. We may not have answer to all these issues immediately. Something that is in my mind based on the same thing that you mentioned about takaful is more like considering it a virtual entity and considering that part of accounting as a associate accounting in the books of the consolidated one. But then some of the banks will say, we want to show total assets, we want to show total return, we want to show, so how you show total asset or total return? Can you club both of them in the same line items? It's not actually exactly the same thing. Saying that this is interest and this is non-interest and this is halal and this is haram, and then saying clubbing together in the same line item might not be the best thing to do. But yes, Brother Farooq, highly appreciated your comment. Yes, this is a genuine issue. Yes, we do not have a quick answer to that. To some extent, we can say that because we discussed some of these issues and our board was deciding that this is not our domain to decide, because we cannot say what disclosure or what treatment conventional should be doing for us. We can say, okay, this is a reporting entity, you do full reporting. This will make sure that the stakeholders have the right set of information. But how to do it? We will take your comment again to the board. We'll see if as a board we can do some solution to that. We can suggest something to that. Highly appreciated your comment, and absolutely it's a valid comment, but this is something we are also struggling with. We have some QA. On the QA, there are some people. Sheikha Almas, sister, please could you repeat about wakala placement, what is not acceptable? Sister, my point was that if I am a Islamic finance window or Islamic financial institution, and I want to place with a conventional institution, either a separate institution or my own conventional wing. In that situation, if I do a wakala is done in a manner that you become part of the original transaction. Since the conventional transactions are impermissible, so I cannot do a wakala or a mudarba or a musharaka with a conventional institution. On the other hand, a conventional institution can do a wakala placement with me because my activity is permissible, and with regard to getting money from them, it is not preferred, but it might not be haram. Brother Sheikh Hisham, what are the major risks faced by Islamic window in different of full-fledged Islamic institutions, especially from financial requirement point of view, especially on SPV or investment fund example? Sir, we said that SPV and Islamic investment funds will be subject to full-fledged accounting under FAS 14 and FAS 34. So they will not be subject to requirement of this standard. That was the whole idea, that SPV will be subject to accounting of FAS 34, investment fund will be subject to accounting for FAS 14. So SPV and investment fund will not be subject to accounting as per this standard. Sheikh Almas, yes, the wakala is Islamic borrowing. Yes, it can be Islamic borrowing. It can be Islamic deposit. In Oman, it is being used on the asset side as well. So it can be both sides. So if it is, the only issue was that if at the one end there is a conventional institution or your own conventional counterpart, then can it be permissible or not? That's what we have discussed earlier. Brother Imtiaz is a question again, is that allocation of common expenses, which is un-Islamic between conventional finance and Islamic finance window, are covered with 20% tolerance allowed in exposure draft? This is question, I'm very sorry, this question is not very clear to me. So can you kindly repeat this one? Explain this one further. We have question from Brother Ishtaq Farooq. Right now, the entire global market is working under British commercial law standards based on that. Does Islam have a commercial law? Islam has a commercial law since centuries. A lot of mercantile law and commercial law maxims, etc., are actually coming from Islam. But actually the world is dominated by those who actually conquer it. When Muslims conquered the world, it was their commercial law that was dominating. One of the most important documents that is available, still available, is Majalla al-Ahkam al-Adliya from the Ottoman times, from the Osmani Khilafat time. You can refer to that document. It has some very good, but that is a combination of the new commercial law coming originally from Islamic, and it is written in the new commercial law style. It's one of the best documents that we will find on that area. But again, yes, Islamic commercial law, there are hundreds of books on Islamic fiqh al-mamlat which actually cover the Islamic commercial law. AAOIFI Sharia standards are actually based on that, and they actually form basis for Islamic commercial law in the current times. with regard to Islamic finance transactions in particular. Samar al-Rashid, I raised my hand. Can I please ask a question? So please go ahead. Can you allow Brother Rizwan? Can you allow Samar al-Rashid on that?
Yes, salam alaikum.
Wa alaikum assalam.
I have a question. If a conventional bank takes a deposit from an Islamic bank under a commodity murabaha structure, and this deposit is reported separately for accounting purposes, so it shows that it's an Islamic liability, does this deposit have to be used for Islamic transactions, or it can be used for conventional transactions?
This is a very complicated situation that you mentioned. So first thing is, if it is a pure conventional institution, first thing, tawarruk as per Islamic finance is not preferred. As per AAOIFI Sharia standard, it's not preferred. But AAOIFI Sharia standard says that tawarruk should not be used to provide funding or placement with conventional institution. So this goes, whatever, if it is done, it goes against the core principles of AAOIFI. That is one thing that we should keep in mind. Now coming to this part, whether this commercial conventional bank has an Islamic window or not will change the difference. If it has the Islamic window, then the window will be considered as an Islamic operation. In that situation, the fund that is procured through this commodity murabaha or tawarruk transaction must be used for the purpose of Islamic finance transactions only. So it depends on the structure of the conventional institution. So if it's a normal conventional institution which does not have a window, in that situation, this is generally prohibited by AAOIFI Sharia standard. And in this situation, there is no binding on the counterparty because it does not have a window, so it is not binding on that. On the other hand, if the conventional bank has an Islamic window and that Islamic window obtains that funding on a tawarruk basis from another Islamic bank, this is not preferred but allowed. And in that situation, as allowed option, it will be used for the purpose of Islamic only.
So, okay, so we consider a bank that has a conventional bank that has an Islamic window. So it's prohibited to invest this deposit in a non-Islamic asset? Or it's preferred?
My apologies, I couldn't hear your question very clearly. Can you kindly repeat, please?
Yeah. So if this is the case of a conventional bank that has an Islamic window, and they will take this Islamic deposit, a commodity murabaha deposit. So you're saying that it's preferred, not preferred, but it's allowed to take this deposit. But the question is it preferred or not allowed to invest it in a non-Islamic asset? Can it be invested in a non-Islamic asset, or it's prohibited?
The question, for that question, you need to clarify whether this conventional bank has an Islamic window or not.
Yes, so we assume that it has an Islamic window.
If it has an Islamic window and this commodity murabaha deposit is received in the Islamic window, then it cannot be used for any conventional activity.
Okay.
Okay.
Okay. All right. Thank you.
Okay. So then we have another comment. Then we have comment from Brother Ishtaq Farooq. Can it be shared that with few central banks are following economic system of Islam? If so, all activities should fall within economic system of Islam. And I think we are getting a bit late. So Brother Ishtaq, I'll drop this point for now. It is not relevant for because at times we just go away from away from our topic. So right now we have to be more focused because now we are running a bit late. Brother Sheikh Hassam has a question to commingle replacement with conventional one without knowing which is the minimum percentage of conventional load. Actually, we do not have any this minimum percentage, etc. I don't think any of our standards is actually allowing this thing. We are actually asking to keep it segregated. So Sheikh Hisham, I'm not very clear on this point again. Okay, so with that, do we have anybody else raising hand? Brother Ghulam Shabir, please.
Thank you so much, sir. I was just wondering whether some other core kind of disclosures are part of this exposure draft, like a disclosure on related party transactions within Islamic banking windows regime. That's number one. Number two, whether the return payouts by Islamic banking windows vis-a-vis its conventional counterparts, so that the public may get an idea with which kind of businesses are more investment friendly in terms of results.
Anything like this, which also involves the conventional part, might not be within our domain. You as regulator may do that, but within our domain, it might not be there, sir.
Okay, thank you. I was just, making a recommendation that whether these kind of disclosures can become part of this exposure draft.
We take note of that, sir.
Yes.
We take note
Thank
of.
You.
Again, one thing to clarify: whatever comments we receive, we take note of all those comments. These go to public, all combined with other public hearing comments and the written comments. These are taken to the board, and then we finalize. With that, I think we need to conclude for the first session right now, and we need to take maybe a 10-15 minutes break. We are running a bit late, but I think it's prayer time, getting late for Pakistan as well as for Bahrain. So maybe we need to have a 10-15 minutes break before we continue for the second part of the session today. We are running a bit late, so second one we will try to make more quick. But I think a 15 minutes break is necessary. So it is 12:20 Bahrain time, 2:20 Pakistan time. So we join back at 2:35 Pakistan time to 12:35 Bahrain time. So just we keep connected. Just we will be away for like 15 minutes. Brother Rizwan, shall we continue?
Yes, please. Bismillah.
Yes, please.
Okay, thank you. I think we need to go for the next event. Thank you everybody for staying with us and for your kind comments on the first of the standards that we were going to discuss. We will welcome all comments that can still be received through emails and in writing in different forms on the earlier standard. Now we are going to discuss the second standard for today, and that is interim financial reporting. Let me share my screen with you. I hope my screen is visible to all of you. Okay, I can just see there are some more comments appearing in the window. I think these were addressed already. Okay. These were related to the earlier ones, so I have cleaned those questions. So we'll go with the next one, that is interim financial reporting. Interim financial reporting as per AAOIFI standards has been done historically according to the IFRS framework, IAS 34, etc., and the local regulations with regard to interim reporting. Interim reporting is not applicable on all institutions, but in most of the countries, in the public interest entities and the listed entities are actually required to do the interim financial reporting, for which they need to have a proper framework. From the AAOIFI's perspective, the main reason and main rationale for having this standard is actually that earlier it was being done under IFRS framework, but and generally speaking, it is neutral. It is neutral from Sharia perspective, and no specific Islamic financial institution, etc., Islamic finance transaction, etc., accounting is defined in this one. So for most of the purposes, we can say that that neutral use of IAS 34 and IFRS framework for the purpose of interim reporting was generally considered okay. However, when we were developing our new framework and financial accounting standard number 1 was being revised, along with that, there was a FAS revision project on which we conducted multiple surveys and roundtables. Some of the participants at different stages and some of the board members at different stages raised this question that there should be some guidelines from AAOIFI on the interim financial reporting. The main reason was that the framework under which the standard is the interim financial statements are prepared is appearing to be under IFRS framework. So there is a confusion in the mind of the readers of the financial statements of interim financial statements of Islamic financial institution that it is referring to IFRS, while the main accounting treatments, etc., are in accordance with AAOIFI. Similarly, it was not clear as to which of the primary statements, because the primary statements of AAOIFI financial statements are different from the IFRS at times, and particularly the takaful related statements and some of the statements related to banking are not common with the conventional primary financial statements, because normally the primary financial statements are the one which are actually fully presented in the interim with the notes which are provided on a selective basis. So the whole idea was to align the requirements with the framework, with the FAS 1, and to clarify that this standard, applying this standard means that you are actually preparing the interim financial statements in line with AOP standards. This standard still refers to IFRS and other generally accepted accounting principles with regard to the general disclosures, but it specifies the primary statements and specifies certain specific disclosures which are more relevant to Islamic finance transactions. This is a new standard, and the whole idea of having this new standard was discussed at different stages in the board in different forms. One of the options was that it can be considered as a full standard like it has been done now. There was one consideration that it can become a chapter or an appendix to financial accounting standard number 1. After long discussion, the board decided not to do that. Because financial accounting standard 1 actually primarily is not applicable on the interim financial in the interim condensed financial statement. It can be used for interim financial statements if a full set of financial statement is prepared, but it is not primarily for interim condensed set, and particularly where the judgments and the estimates, etc., are applied on a periodic basis and not on a full year basis. That may be different. So that was one of the reasons that it was decided that it cannot be form part of FAS 1. Then the second option was discussed that it can be considered as guidelines, because we don't need too much details on that. So it was decided that it was discussed that it can take form of guidelines also. However, the board, after due deliberation, decided that if we put guidelines, then still in the framework, it will be continued to be called under IFRS framework of AS 34. So the idea was that we should be sticking to our framework, and we should be developing it as a short standard. So this is about the introduction and preface. Let me take you through the objective and scope as well, then we can take comments. On the objective, this standard sets out the principles for the interim financial reporting for all institutions having adopted AAOIFI FASs, and should be read in with other AAOIFI FASs and generally accepted accounting principles applicable in relevant jurisdictions. The standard applies to the institutions required to prepare and publish interim financial reports according to applicable law directions of the respective regulators and or where relevant the stock exchanges. This standard also applies to the institutions voluntarily electing to prepare and publish interim financial reports. Any comments on the introduction rationale that I provided, as well as the objective and scope? Do we have any comments on that?
A couple of hands raised, Brother Umar.
Okay, and the attendees we have Brother Asim Nadeem and Zahir Mir. I can first see Zahir Mir. So please, Zahir Mir first.
While he unchecks, maybe Brother Asim.
Brother Asim Nadeem, please.
I guess. Okay.
Hello. Do you hear me?
Yeah, we can hear you.
Is this a standard also applicable to conventional financial institutions offer Islamic services?
This is a good question. Actually, when we define Islamic financial institution, the Islamic financial institution include the windows. I think it's part of the definitions also. No, we haven't put definition of Islamic financial institution here. Sister Farida, please note it down. We need to consider Islamic financial institution definition here in this standard as well as the window standard. Reason being that although it's understood and it is provided in the framework and financial accounting standard 1, but maybe we need to reproduce that. The financial accounting, the AAOIFI's definition of Islamic financial institution includes a window. Window, standalone branches, etc. They are included in the definition of Islamic financial institution. So we believe that if interim financial reports are prepared for the conventional that has an Islamic window, it should be applied. However, I believe it is not clarified very clearly somewhere. So Brother Asim, your point, we'll take it to the board and we'll consider putting this definition of IFI, and we'll consider putting a very clear clarification in this regard as to whether it should be there or not. in my understanding, based on the definition, my quick answer is yes, it is required, but it is not very clearly mentioned. So it might be good if we are going to mention as per your advice.
Thank you.
Thank you very much. Brother Zahir Mir. I think his hand is raised, but it is still muted. So it's okay. We move ahead and we can take the comments later. Okay. Now, for the purpose of interpreting and applying this standard, the following short definitions are relevant. Interim period is a financial reporting period shorter than a full financial year. An interim financial report means a financial report for an interim period containing either of a complete set of financial statements as prescribed with FAS 1 or a set of condensed financial statements as described in this standard. So interim financial report can be a full set or a condensed set, but it has to be prepared in line with this standard. So even if it's a full set, some of the judgments and estimates might be like in line with the principles in this standard. Paragraph 5, preparation, the institution shall take guidance from generally accepted accounting principle, that is generally it is understood to be IFRS, as applicable for the purpose of preparation of interim financial reports unless a contrary stipulation is prescribed in this standard. Forms of interim reports. The institution shall have a choice that the interim financial report is prepared and presented either in accordance with 4B1 or 4B2. 4B1 and 2 is either a full set or a condensed set. Where the institution opts to prepare the interim financial report in accordance with paragraph 4B2, it shall prepare such reports in line with the paragraph 12 to 14 of this standard, that is the condensed version. Now, some requirements are applicable or not. Accounting policies. An institution shall apply the same accounting policies applicable to previous annual financial statements according to FAS 1. Accounting policies. Any change in accounting policy, including a change resulting from adoption of a new FAS, shall be made according to hierarchy of selection and application of accounting policies as per part 3 of FAS 1. Such change in accounting policy shall be applied in line with the requirements of FAS 1 in a manner as these are applied for the annual financial period. So even for interim, you need to apply it on a full basis. Other significant considerations. An institution shall identify specific considerations with regard to applicability of AAOIFI FASs in respect of relevant accounting treatments and the generally accepted accounting principles, particularly with regard to the minimum disclosures on the interim financial report, including but not limited to A, application of judgment in making estimates, assessment of materiality, including qualitative materiality, recognition of losses from impairment of assets and or credit losses, acquisition and disposal of items of property, plant and equipment, including any commitment for the same. I just noted this thing, Sister Farida, application of judgments, it should be, I don't know whether it's an error in the typo error in the standard or in the presentation only, just take a note of it. Application of judgments in making estimates. Okay, settlement of a litigation or a significant change in possible outcome of an ongoing litigation, correction of prior period errors, changes in business or economic circumstances that affect the fair value of the institution's assets and liabilities, related party transactions, and changes in contingent liabilities and assets. So these are the significant considerations in accordance with this standard. Some of them are common with the IES, but some of them are some of them might be specific with regard to this one. I think there are some minor changes in this section only. There are minor changes from IFRS. With regard to first-time adoption, an institution adopting the AAOIFI FASs for the first time shall consider requirements of paragraph 22 of FAS 36, first-time adoption of AAOIFI financial accounting standards. So this is something that is referring to that can because the interim financial statements which are prepared after first-time adoption would be subject to some specific requirements which are provided in paragraph 22. So instead of repeating, we have prepared it across. We offered a preferred a cross-reference to the same. Minimum components of interim condensed financial report. Interim condensed financial report shall include minimum the primary statements in line with relevant AAOIFI FASs. So for the banks or for the TAKAFUL or for the other type of institutions, whatever are the primary statements shall be as per the respective standard. For ease of reference, we have provided an appendix B in this standard, which provides the primary statements as of now, means that as of the date of issuance of this standard, what are the primary statements? Those are to be included as appendix B. I'll take you to appendix B maybe we can see it now. So for the banks, statement of financial position, statement of income and other comprehensive income, either as a single statement or two statements. In statement of income and attribution related to quasi-equity for financial reporting period. This is a new statement as per FAS 1, so it will also be included in the interim reports. A statement of change in owner equity for the financial reporting period. A statement of cash flows for the financial reporting period, a statement of change in off-balance sheet assets under management for the financial reporting period. So these are the primary statements for banks and similar financial institutions, so these will be applicable. In case of Takaful, according to the new exposure draft, these are the statements which include statement of financial position, statement of income and other comprehensive income, statement of change in owner's equity, the statement of cash flows, statement of financial position of managed participants, Takaful fund and for the general and family operations, the statement of financial activities for managed PTF, statement of managed participation investment fund. On the Sukuk side, it is very simplified. For business Sukuk, SFP and income statement, and for non-business Sukuk, NAV statement and a statement of changes in NAV. Financial reporting by Waqf institution, again, as per the Waqf standard, it has to be statement of financial position at the end of the period, statement of financial activities for the period, a statement of Ghalla, which is a specific statement for Waqf, a statement of change in equity, and a statement of cash flow. So these are the primary statements according to a respective AAOIFI standard. So this standard requires that when you prepare the interim financial reports, at least the primary statements are to be presented. So this Appendix B comprises of the primary statements which are applicable as of this time. Then we have some very specific requirements. Obviously, there have to be notes comprising significant change in accounting policies and other explanation, etc., including minimum disclosure requirements as per generally accepted accounting principles and relevant regulatory requirements. Then we have minimum components. It shall avoid repetition of information previously reported. In this respect, the institution may generally provide less information as compared to the annual statements, and instead shall provide an update on the latest complete set of annual financial statement. This requirement is more or less in line with IFRS. These updates shall include new activities, events, and circumstances only. The interim condensed report shall include at a minimum each of the headings and subtotals which were included in most 8% annual financial statements. In the minimum components, there are some additional specific requirements according to the nature of Islamic finance transactions and according to nature of Islamic finance institutions. So some specific requirements are there in line with relevant phases. So disclosures related to quasi-equity, including investment accounts in line with the requirements of FAS 27. Disclosure related to Wakala bil Istismar in line with FAS 31. Disclosure related to off-balance sheet investment assets, investment accounts, and other off-balance sheet managed assets in line with FAS 1. Disclosures related to profit distribution. Disclosures related to Sharia non-compliant income and charity in line with FAS 1. A disclosure for new Sharia compliant products and services launched during the interim period and a reference to the new accounting policies adopted, and disclosure to related to Zakah in line with the requirements of the new standard on Zakah. So these are the minimum additional requirements that are there as per which are specific to the AAOIFI standards or specific to the nature of the type of Islamic finance instruments which are applicable to Islamic finance assets and liabilities. So with that, we are proposing an effective date of 1st January 2023. It's a very short standard, and we hope that this standard will be finalized in a very short span of time. Today, we are holding the first public hearing, and we will be trying to do it on a very fast track. So maybe we plan to finalize it by mid of next year or something around that. So from 2023 onwards, this can be applied. So I have been quick on this standard because it's a short standard and there are not too many points to discuss, but I tried to be quick. Now we can take the comments from the participants who want to raise their hand and want to talk in person, as well as any comments in the QA tab. I cannot, as I mentioned earlier, I cannot go to chat tab. In chat tab, I can see a lot of chats are there, but I'm not sure whether those are questions to be raised here. But I cannot see any hand raised in the participants. It's a fairly simple and straightforward sort of standard and a very short standard. But still, if anybody has a comment, particularly with regard to any specific disclosures that they feel should be included here, please let us know.
Brother Umar, we don't see any hands raised. There are no questions.
Okay. Among the panelists, there is a hand raised by Brother Ghulam Shabir. Brother Ghulam Shabir, please.
Sir, thank you so much, sir. Just wondering, is there any suggestion with regard to disclosure on CSR related activities?
Sir, Dr. Ghulam Shabir, brother, this CSR activity standard is not part of our accounting standard. We have a very good standard on CSR activities, which is standard number 7 on governance side, governance standard number 7. On the CSR standard, there are disclosure requirements as well. So that it provides the CSR activities and the conduct that should be there as a mandatory and recommended conduct on the CSR side, as well as what should be the mandatory and minimum disclosures and preferred disclosures on the CSR side. Those disclosures are actually part of our accounting for our governance standards. So they will be generally forming part of the annual report and not of the financial reporting standard. So for financial reports. So generally speaking, I would say that CSR disclosures will be not in the financial statements, will be in annual report accompanying the financial statements, and they will be considered for the annual report purpose. So may not have too much relevance to the interim reports. However, now we are working on two things. Number one, we have started working on a responsible finance standard, which may bring in some changes to the CSR standard as well. So that is on the governance side. Secondly, we are considering the integrated reporting now. IFRS is also working on the integrated reporting in different aspects, and we are also considering the integrated reporting on different aspects. So maybe AAOIFI may come up, not now, maybe in 1 to 2 years time, AAOIFI may come up with an integrated reporting standard, which will integrate some of the disclosures which are on the either on the financial statements or on the annual report, but are there to show the performance and the qualitative measures of the performance and qualitative measures with regard to the CSR and other activities, responsibility, sustainability, etc. So we have just recently started learning more about it. IFRS is also working with the Integrated Reporting Foundation, and they are also trying to bring something. We have also started thinking of it. We are at a very initial stage right now, but we hope that in the times to come, it will be there. With regard to the responsible finance and sustainable finance standard, that is already on a advanced stage. But with regard to this integrated reporting standard, it will be like in due course, it will be there. We have a hand raised by Brother Asim Nadeem. Brother Asim Nadeem, please.
Yes, my question is, do we understand that SBP will revise its interim financial reporting form according to this standard?
Sorry, I couldn't hear you very clearly. My apologies. Can you kindly?
No problem. Do we understand that SBP will revise its interim financial reporting form according to this standard?
As of now, brother, SBP has not adopted AAOIFI financial accounting standards, but at one place in that the guidelines, it mentions that it can be used at guidelines. So there is the formal adoption of AAOIFI financial accounting standards in Pakistan by SBP or by SECP is not there. So, so some of these standards are used as a guideline, and we have seen some treatment in Pakistan for some of the some of the products, which is very close to AAOIFI. Similarly, the local IFAS 1, 2 are implemented. 3, 4 were also developed. 5th was also being finalized. They were all aligned to AAOIFI standards, but all of them are also not finalized and not adopted by SBP. So, in a nutshell, the level of adoption of AAOIFI FASs at SBP level is not at an advanced stage. AAOIFI Sharia standards, SBP has adopted significant number of standards already. Most important standards are already adopted. Some of them are with minor changes as well, but most of them are adopted on the Sharia side. But on the accounting side, it is not. It is still not in a very good shape with regard to the adoption status. And we request every time SBP that they need to pick this thing on a priority basis.
Okay, thank you very much.
So with that, if we don't have any other comments, then back to you, Brother Rizwan.
Thank you very much, Brother Umar, for a very comprehensive overview of the two standards. I think this has been truly enlightening for the attendees, inshallah. I just want to, before we wrap up, we just want to check with our co-organizers, SPP, Mr. Farooq, and if Mr. Ghulam Shabir would like to say something before we close, inshallah, for the day.
Thank you, Dr. Rizwan. I think this is a fabulous presentation. I think Umar has such a grip on the financial accounting standard. It is much commendable. I'm sure all of the participants, I could see that people from Pakistan, from other places around the world have been attending and raising questions, and it has been an excellent discussion. And I hope that every participant, every attendee must have now have a very good understanding of the draft. I think some very good comments have also been made, which have been noted by AAOIFI, and those I'm sure will be looked at. So a very deep thank you from our side, from the Institute, for being part of this discourse, this discussion, and we look forward to have such a session going forward as well. Thank you.
Thank you. Inshallah. Thank you very much for the support. I think this is very important for us to have the support that comes from the likes of yourselves. For us individually, we can only do so much. So thank you very much for your support. Mr. Ghulam Shabir, would you like to say some concluding or deliver some concluding remarks before we close for the day?
Thank you so much. Thank you so much, Dr. Rizwan. And I would like to echo with Brother Farooq. In fact, we really appreciate AAOIFI for this public hearing session. In fact, this has really improved our understanding of the standard in the making. And hopefully this will also help in sort of a very good disclosure regime for the overall global Islamic financial industry. We thank you for your efforts and for your intellectual input and your guidance, and especially selecting Pakistan for your first public hearing session. I hope that Pakistan would like to serve you in the upcoming your initiatives on standard making and exposure drafts, and would like to be part and serve in the development process of your exposure drafts and standards. Thank you so much. Thank you so much. And at the end, I would like to really appreciate once more all the AAOIFI team who has worked on these standards and who have worked for this public hearing session. Thank you so much.
Thank you very much, Ghulam Shabir Saab. I think this has been enlightening. As I said, it wouldn't have been possible without your support. So really appreciate your support, in particular for coming from Brother Numan and Brother Amit. I think they've been very supportive in terms of organizing this event. Of course, all thanks to the AAOIFI Secretariat, and in particular the Standards Development Team, well led by the Secretary General himself, in putting together these very important standards for the industry. For these two particular standards, we will be continuing the public hearing sessions. If you have missed out, for example, for today, there will be another public hearing session on the two standards on the 22nd of November as well, with the stakeholders in the GCC. So you are more than welcome to attend that, share your comments live through that session, and also share your comments through the email at accounting@aofi.com. We will be having 2-3 more public hearing sessions, so we will have some more time before we finalize and put forward all these comments, including yours, to the working group and the board itself. So with that, let me thank you all for being with us this morning, this afternoon, from wherever you are. It has been it has been an honor to have you with us, and inshallah look forward to having you more future sessions. And also please do feel free to register for the AAOIFI Islamic Development Bank conference taking place on the 1st and 2nd of December. It's a physical conference that we are organizing after 2 years in Bahrain. However, it will be it will be available online as well via Zoom, YouTube, and other social media platforms. So please tune in, register for that as well. It will be very enlightening discussions that will happen, inshallah, during that event, and we all look forward to that. It is being put forward with the help of Islamic Development Bank and also the Central Bank of Bahrain, as well as many other supporters of the industry. So inshallah, we look forward to hosting you there as well. If you can attend physically, please be our guest in Bahrain. If you can attend virtually, then of course you register through the AAOIFI website. So with that, we thank you all very much for being with us, and inshallah we see you again in the next session. Thank you. Assalamu alaikum.
Thank you.
Assalamu alaikum, everybody. Assalamu alaikum.
Thank you so much. Thank you.
Wa alaikum salam wa rahmatullahi wa barakatuh.